So, hello everybody, and welcome to this revision series for CA Final DT. That too in complete English. And today, what we are going to revise, we are going to revise a very crucial chapter for your examination, that is Income Tax Authorities, Return Filing, and Assessment Procedure, including Block Assessment. So, if you are new to the channel and watching me for the first time, why are you watching me for the first time? You have not liked the video, you have not subscribed the video till now. Okay, sir, done, sir. Let's start right away. First part of the chapter, that is income tax authorities. Now, first of all, who are income tax authorities? We have Central Board of Direct Taxes. That means CBDT is an income tax authority. CBDT has two kinds of wing. First of all is investigation wing and the other one is assessment wing. Now, what is the purpose? See, investigation wing does the majorly investigation work. Assessment wing does the assessment work. That means whatever the assessment that we see now is being done by assessment wing only. Now, who all are the key important people in this? See, first of all, over the top, we have Principal Chief Commissioner of Income Tax. Below which we have Chief Commissioner of Income Tax. In short, we call it PCCIT or CCIT. Below which we have PCIT, which is Principal Commissioner of Income Tax. Below which we have Commissioner of Income Tax. Going further down, we have Joint Commissioner oblique Additional Commissioner. They both are of similar powers. We have Assistant Commissioner and we have Deputy Commissioner. These two also possess the similar power. Below of all, we have ITO. And going down further, we have Tax Recovery Officer and Inspector. This is the hierarchy of assessment wing. Likewise, we have hierarchy of investigation wing, that is PDGIT, that is Principal Director General. This is the topmost in this investigation wing. Then we have DGIT, focus at DGIT. Below which we have PDIT and below which we have Director. We go further down, we have Joint Director and we have Assistant Additional Director. At last, we have Assistant Director and Deputy Director. I hope it is very clear. It is not that difficult. But remember, whatever the authorities I am marking in blue, Joint Commissioner, Additional Commissioner, Assistant Commissioner, Deputy Commissioner, ITO, Additional Director, Joint Director, Assistant Director, Deputy Director, all these five people club together and form Assessing Officer. All these five people are called Assessing Officer. The thing that I'm highlighting in red, remember, the names I'm highlighting in red, these eight big peoples. These are actually not named anywhere, but I call them big people. I call them big people. So remember the name. Assessing officer include these five people, and big people include these eight people. These all combinedly form IT authority. In addition to that, we have another IT authority, that is Joint Commission Appeals, which actually looks after the appellate matter, and we have CIT appeals. This is also considered as IT authority only, but this is with respect to appellate department. So all of them combined together form income tax authorities. Done, sir. Done, sir. Done, sir. Done, sir. Now we have powers of CBDT. We have three powers of CBDT. Three things that CBDT can do. Three things that CBDT cannot do. Three things that CBDT can do. Three things that CBDT cannot do. First thing, CBDT can issue instructions, circulars to IT authorities. See, IT authority is unaware about how to do the block assessment, so CBDT might give instructions. Many of the instruction circulars are being issued. Now, what CBDT can do? CBDT can relax certain provisions, like for example, tax audit. Tax audit due date is extended. For example, tax ITR due date is extended. These extensions are being done by CBDT. CBDT can pass general order or specific order to admit refund loss in case of genuine hardship. So if you have genuinely delayed the return, then CBDT can help you to admit the losses. So these three things that CBDT can do. But there are three things that CBDT cannot do. What are those three things? First of all, CBDT cannot interfere in appellate proceedings. CBDT cannot interfere in appellate proceedings. That means if there is an appeal going on at CIT, ITAT, CBDT cannot interfere. CBDT cannot say, "Oh, he has done this thing. Just do it. Just do it against him." CBDT cannot do. Similarly, CBDT cannot request IT authority to do specific assessment in a specific case. CBDT can issue general instructions, but specific wise assessment it cannot be directed by CBDT. At last, CBDT cannot amend the legislative provisions. Whatever the act is there, whatever rules are there, CBDT cannot amend that. So CBDT can do three things, cannot do three things. Done, sir. Jurisdiction of an assessing officer. Now listen, if I am assessing officer in Chennai, okay, Now, which all people I can apply my powers? This is what the section talks about. First thing, whatever the people who are resident in my area, na, I can exercise my powers on that person. Or if some person does business in my area, I can exercise my powers on him. Or if someone who is not a resident, who does not have any business in my place, but he has principal place of business in my area, that means his main decision making is being done from my area, then I can also exercise my powers on that such person. I can ask him for any information, I can do his assessment. So, for an assessing officer, whoever people are resident of his area, whoever the people are having business in his area, or whoever the people are having business principal place of business in his area, can be covered under the jurisdiction of an assessing officer. Remember, see which type of assessing officer will be allotted to me. It completely depends upon my income. It completely depends upon my territory. Section 131, General Powers of IT Authority. See, in income tax authorities, now we have two basic powers. First of all is general powers. First of all is general powers. What is general powers? See, every IT authority can do the discovery and inspection portion. Now, what is this? See, for example, there is a land outside, okay? And land, nobody knows who is the owner of that land. Can IT authority ask any of the department that who is the owner of this land? Right answer is yes, they can ask. Second thing, enforcing the attendance of a person and examining such person or not. For example, all of a sudden CBDT said, "Hey Rahul, meet me, meet me there," and this recorded my statement. They forced me to speak up something, and I spoke. And today after tomorrow, they used my statement in court because I took such statement. I said that statement on oath. That means they can record my statement and they can use that statement against me in the court as well. CBD can compel me produce for the production of books of accounts, and they can even impound books of accounts for maximum 15 working days. This is simple. Fourth one is issuing summons, issuing commissions. That means you have to be present at department on this and this date. This commission or summon issue can be done as well. Now, how do we learn that? See, there are four things. First of all is sir, discovery inspection. Second, examining person on oath. Third thing, impounding books of accounts. And fourth thing is issuing summons. These four things must be learned. These are the general powers that every IT authority have under section 131. Done, sir, done, sir, done, sir. We are aware. Now, IT authority do have special powers as well. Now, what are those special powers? Listen, I have categorized those special powers into two broad categories. First category is they can collect my information via just a conversation. Conversation, that means they will write a notice to me. I have to respond. They will write to notice to somebody else and he will respond. See, via communication, IT authority can get to know our information. But there is another way. They can visit my premises. So there are basically two types of powers. First of all is via communication. IT authority will get to know our information via communication. And how they will communicate? They will communicate from any of my books. What books, sir? They can communicate from any of my banker. They can communicate any of my, say, debtor, creditor. They can communicate any of my stock agent, registrar. They can communicate to my broker. They can communicate to my lender, creator, and even my neighbor as well. This power is being covered under section 133.6. What this 133.6 says, IT authority can request information about me from anybody outsider. IT authority can request information about me from any outsider. About me from any outsider. Remember 133.6, 136. About me from outsider. But sir, won't they misuse this power? Are they not going to misuse this power? Of course, they are going to misuse this power. So, not every IT authority is allowed. Provision says if there are any pending proceedings against me, that means any assessment is already going on against me, any IT authority any IT authority can ask information about me from anybody else. That means if there is assessment going on, any IT authority can ask information against me. But if there is no proceeding pending against me, if there is no pending proceedings against me, no pending proceedings, then what will happen? Then remember, in investigation wing, now every IT authority, including PDGIT, to assistant director, deputy director, everybody can ask. But in assessment wing, na, PCCIT can ask, CCIT can ask, PCIT can ask, CIT can ask, but joint commissioner, assistant commissioner, ITO cannot ask unless they take prior approval from these big people. What did I say? My information from third party. When can IT authority ask? First of all, if there is assessment going on against me, pending proceedings going on against me, any IT authority can ask information against me. But if there are no pending assessments going on, no pending proceedings going on now, then investigation wing can ask, but assessment wing, only these big people can ask, these assessing officers cannot ask. And remember, it is an obligation of the third party to respond to IT department. They cannot just say that I will not tell, I will not tell. No, they have to tell. And if they don't tell, na, penalty of 500 rupees per day will be levied on the person who will not respond. 500 per day till the time they don't respond. Done, sir, done, sir, done, sir. We got this point. Now, another power about our information is under 133C. See, two sections we have via communication. First section was 133.6, second section is 133C. Where any investigation wing, any person from investigation wing can ask any information against me. Any information against me, even if there is no proceedings going on against me. What did I say? Two types of power via communication. Two types of power via communication. What are those powers? Asking information about me from third party, that is 133.6. Asking information about me from myself, that is 133C. Okay, 133.6 can be organized. It can be based on depending upon whether assessment is going on or not. But 133C, that is investigation wing asking from me, can be only authorized if there is no assessment going on. When assessment would be going on, then they would directly ask now. Done, sir, done, sir. Now we have powers in which they would come to my premises. They would come to my premises and find out what actually is going on. Now, what the first section is? First section is 133B. In this section, what happens? The IT authority come to my premises. They would come to my premises just to collect information. There is no other purpose involved. Just to collect information, they would come to my premise. Now, when they are going to come, remember, they would only come during the business hours. They would only come during the business hours, not at any other time they would come. They would only come at the business hour. In addition to that, they can come without any prior approval. That means no prior approval required. See, business hours, no prior approval required. In addition to that, can they impound books of accounts? No, sir, they cannot impound. IT authority cannot impound books of accounts under this section. So under 133B, three things we understood. IT authority can enter for the purpose of information collection. At what time they will enter? They will enter in business hours. The time for which such businesses open, that is business hours. Can they impound books of accounts? No. Do they require prior approval? No. Got it, sir, got it. This was the first power that IT authority have against me. Second power that IT authority have is the best of all is survey. Why best, sir? I think it is best. See, first of all, now why do they conduct a survey? They conduct a survey because they think that whatever the data mentioned in your books is, whereas the real data is so different. For example, you say stock is 40 lakh rupees, but in reality stock is 2 crore rupees. So there might be differences between actualities and books. For that matter, for such verification, IT department would do survey. Now, when they would do survey, understand, they would do survey when they are authorized by CCIT or DGIT or above authority. Not even CIT can approve survey. Whenever they will enter your premises, they have six powers. Understand? With respect to books of accounts, now they have two powers. That means they can inspect books of accounts and they can impound books of accounts. Inspect books of accounts and other documents, impound and retain books of accounts. But remember, in case of survey, maximum 15 days plus extra with prior approval, they can impound books of accounts. What other powers they have? If you have any stock, cash, other valuable articles, in this case, what they can do, they can check them, they can place identification mark on them, and they can make an inventory on them. That means make a list of all the items. What did I say? Check them, place identification mark, make inventory, and also at last they can record the statement of you. Whatever you say now, they will record it and they will use it against you. These all six powers fall under survey. Now, when they are going to enter your business premises, understand, when they are going to enter, see, if they are going to do survey at your business premises, factory, godown, or any of the business premise. Now, when they would do, they would only do during the business hours. If your business is open, they would come. If your business is not open, they will not force you to open. But if they want to enter any other place, for example, they want to enter your home, they want to enter your farmhouse, provision says in that case, they would only do it after sunrise, before sunset. That means the time sun is available until that time only they can do. Apart from that, they cannot do. Also, Sir, for example, they did survey at my premises and my books of accounts are kept at my farmhouse. Can they cover such farmhouse also under survey? Provision says yes. During the survey, if they feel like that books of accounts are kept somewhere else, then they can cover such place as well for the purpose of survey. Remember. If IT authority want to do survey at a ceremony, for example, if in my marriage they want to do the survey, in my marriage they want to do, can they do? Provision says yes, they can do, but only after the conclusion of the event. Only after conclusion of the event they can do. That means whenever I am done with that Varmala, then whenever I am done with that Sindurna, when I mean, my wife will be done with Sindur, Mangal Sutra, everything would be done. Na? Then only after that they can do the survey. Similarly, we have TDS thesis survey 133A2A. Now, what is there in TDS thesis survey? Understand. IT department would just come to your premises to find out the actualities whether TDS has been deducted or not. Now, what they would do, understand. First of all, they require approval. Yes, they would require approval of CCIT or DGIT. Now, what they would do, again, they have six powers. Now, what six powers? With respect to books of accounts, now they can inspect books of accounts, but they cannot impound books of accounts. Understand? They can inspect books of accounts, but they cannot impound books of accounts. Why they would impound? Now, they just want to check the TDS. So, why they would impound? If you have any stock, if you have any cash, if you have any other valuable articles, are they going to inspect that? Yes, sir, they can inspect that. Are they going to put identification mark? Yes, they are going to put identification mark. Yes. Are they going to make an inventory? No, sir. Why would they make inventory? Why they would make the list? Because they have just come here to match the TDS now. So why would they make the inventory? At last, can they record the statement? Yes, they can record the statement. Sir, can TDS teaser survey be done at any other place other than your business premise? No, sir. TDS survey would be only done at your business premise only. And the best part, put triple star on this, TDS survey is only done at the time of or after sunrise before sunset. Listen. Three sections. 133B, entry restriction was business hours. 133A, that was survey. For business premise, we had business hours. For other place, we have sunrise and sunset. And TDS survey 133A to A, we have sunrise and sunset. Did you get this point or not? Arey Baba, did you get this point or not, sir? Did we got this point? We got this point because entry restriction is there. So, do they have any exit restriction? No, sir. As whenever they enter, now they should enter on time. They can exit any time, but entry should be on time. Done, sir. Done, sir. Done, sir. Got it. We have next power, that is 132, power of search. Now, how do they do power of search? So, we don't have your books. We don't have your books. How do we get your books? Arey Baba, you can buy my books any point of time. If you don't have whatever books you have, that's okay to me now. That is not going to change. And even if you have not liked the video, you have not subscribed to the channel, so you want me to cry? Do you want me to cry? Do you want me to beg with the katora and just give me subscribe? You are not subscribing. Sir, done with your overacting. Section 132, power of search or seizure or raid. See, we never call it raid. As a professional, we never call it raid. Understand this thing. We call it search only. When a search will be done, remember, search has to be first authorized. Who is going to authorize? The CIT or DIT. Commissioner or director is going to authorize. Can joint commissioner authorize search? Right answer is yes, joint commissioner can also authorize search. Joint commissioner, joint director, additional commissioner, additional director can also authorize the search, but only if they are empowered by CBDT. When a search is going to take place, listen, this is very beautiful point. Sir, there are two sections, that is 131 summon, 142 1 inquiry before assessment. Department has issued this summon against me. If department has issued this 142 1 inquiry before assessment against me and I did not respond, provision says search is going to happen against me. Second thing, best of all, department might issue summon to me. Department might issue inquiry before assessment to me and I might not respond. In that case, also summon search is going to take place. Okay, what did I say? A person to whom notice is issued, summon is issued, and has failed to produce books of accounts. person to whom notice someone might be issued and he might not produce. In that case, search might also take place. At last, provision says a person who is in the possession of books. This is important. This is important. Of course, if somebody has any money, jewelry, bullion, any other valuable article that has not been disclosed to IT department, and it is necessary for IT department to search it, therefore they would. So three reasons. First of all, we have not responded to 131 and 142.1. We might not respond to these sections as well. And third thing, we have any jewelry, bullion, cash that has not been disclosed to department and that might never be disclosed to department. For that matter, search is going to take place. For example, search happened against me. Search happened against me. Do I have any right to know why search has happened against me? Do I have any right? Provision says no, you don't have any right. Can I ask Joint Commissioner or CIT appeals to tell why, to ask why search has happened against me? And answer is no, not even CIT appeals can ask why search has happened. Can I request ITAT to request why such has happened against me? This ITAT also cannot ask. Only High Court can request the department that to tell the reasons why search has taken place. What kind of information was found against me for which search has taken place? This can be only told by department to High Court. Nobody below that. Done, sir. Done, sir. Done, sir. Hours during the search. See, remember. Whenever search happens, takes place against you, IT authority, authorized person can enter any premises, search any place, building, vessel, aircraft where he suspect that books are kept. If department think that money is in my house, they will come to my house. If they think money is in my car, they would come to my car. Any go down, any warehouse, any farmhouse, anywhere they think money is kept or books are kept, they would come there. They would break the locks if I do not provide the keys. They would break the locks. You have seen a daya tala tod do aisa karke they would break the blocks. See, if I have any of my documents in my digital records, for example, if you know Arvind Kejriwal had his iPhone and search took place and he did not disclose anything, he did not share his password. In that case, the department has power to hack your phone and get the data out of your phone. Fourth thing, search any person and object therein. For example, if they entered my premises, can they do? Can they check my pockets? Can they check my turban? Of course, I don't wear turban right now, but any Punjabi wearing turban, can they check that? Yes. They can check any object. For example, I have a sofa set. They can tear down that and search what is inside it. They can check out my basement. They can check out my almirah. Any object they can search. Sir, if they require help of a police officer, they would get the help of the police officer, but only with prior approval of CCIT and DGIT. The most of all, the best of all, they can seize any money, they can bullion, jewelry, anything they can seize. Whatever they find, money, jewelry, bullion, cash, any other valuable article they find, they can seize that. But they will not seize one thing, that is stock in trade. Why? Because if they seize stock in trade, I might not be able to do business now. So in that case, they will not seize that. Sir, but what about building? What about building? If I have building, they cannot take away that building now. So what they would do deemed seizure or constructive seizure. See, these notes have been a very logically made. Everything that comes to your mind now will be in this notes only. See, what happens if they cannot take away the building? Sorry, if they cannot take away your building, so what they would do? They would do deemed seizure. Now, in this case, now they cannot take the physical possession because of volume, weight, nature. So, what authorized officer would do? Authorized officer would do deemed seizure. That means for 60 days you cannot sell this house. You can use this, you can stay this, but you cannot sell this house. There might be other things as well which they cannot seize. For example, I have an oil well in my house. Oil well in my house, and if they won't seize that, I will start selling the oil to the market. Provision says in that case they would pass prohibitory order or order of restraint. If department cannot take away the physical possession of any asset, and because of other reasons, not because of volume, weight, and nature, they cannot take away that. In that case, again they would do 60-day prohibitory order. In both the cases, for 60 days, I cannot use that asset. I can use the asset, I cannot sell the asset. Okay? In this case, what happened? I can use it, I cannot sell. In this case, I cannot even use it, I cannot take out the oil aspect. Okay? In these two cases, what happens? What happens after 60 days? Provision ask. What happens after 60 days? See, after 60 days, either they want to keep those assets for long now. In that case, they have to provisionally attach. They have to provisionally attach. What I'm saying is, if they have seized your building, they have seized your oil well, and within 60 days they could not do anything. they can provisionally attach your assets. Provisionally attach your assets, and this provisional attachment would last for 6 months. But provision attachment can be only done when there are reasons recorded in writing, interest of revenues involved. Remember, reasons recorded in writing and interest of revenues involved, then only provision attachment can be done, and that provision attachment is valid for 6 months. After that, it shall vacate automatically. Provisional attachment is not going to last longer than 6 months. Whenever the search happens now, at that time there are certain presumptions. What are those presumptions? First of all is whatever asset is found is mine. For example, I have a gold chain in my neck, for example. Department came and found out, oh, you have a gold chain. You are the owner. I said, no, 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 I am not the owner. This is my daughter-in-law's. This is my daughter-in-law's. This is not mine. Do you think that department is this? Department will agree to this. Do you think the department will agree? Question says, no, department is not going to agree at all. It is not going to agree at all. Why? Because it is a presumption that whatever asset is found is mine. Second thing, whatever the content of books of accounts are, whatever the content is there is true. For example, my maid, I have a maid in my house. Take it. That maid, just out of nowhere, out of anger, wrote a note that Rahul has received 1 crore rupees. She wrote a note and kept it in my drawer. I have received 1 crore. Now department saw that note and said, "Oh, you received 1 crore." Now provision says it is correct. Whatever written is correct. Whatever written is correct. Whatever written is true. Then signature or any part of the books or the document which seem to be handwriting is my handwriting only. For example, if I wrote something or if anybody else wrote something, it will assume that I have written it's my handwriting only. And whatever the document is being signed has been attested, either has been attested by me or it has been attested in my knowledge. So four presumption. Asset found is mine. Content written is true. Whatever handwriting is mine. Whatever sign is being done is mine. These are four basic presumptions. Best of all, see, Rahul, for example, Rahul is under search. Now, I have a Chennai premise. In Chennai, my premises were searched. Along with that, in Vizag also, my premises were searched. Along with that, in Trivandrum also, my premises were searched. In Amritsar also, my premises were searched. See, multiple premises were searched altogether. So they have to be compiled at a single place now. Assessment cannot take place at different premises, so they have to be compiled at a single place now. So provision says authorized officer who has no jurisdiction over the SSC, he shall give hand over the books to the assessing officer who has jurisdiction within 60 days. So whatever the assessing officer are there now, they will transfer these books of accounts to the lead assessing officer who has jurisdiction over the SSC. For example, I stay at Chennai. So Chennai's assessing officer is going to the assessment now. So whatever the document these four AOs has, they will transfer to Chennai's AO within 60 days. Within 60 days, they are going to transfer. Sir, when do we assume that search is concluded? See, search is initiated. And after few days, when they leave the house, they make a list of items that they have found. It is called Panchnama, and that Panchnama is being signed. Provision says the day on which Panchnama is drawn or signed, it is considered as conclusion of search. Conclusion of search. Beautiful, beautiful point. When they took away your assets, they took away your assets, of course. You studied, na? They can seize any assets. You studied, na? You forgot. They can seize, they can take away your jewelry, they can take away your books, they can take away your anything, they can take away anything now. How can I get that back? How can I get that back? There is a strict provision to it. Listen to this point very carefully. Listen to this point very carefully. It was the initiation of search, and this was the conclusion of the search. Provision says after conclusion, assessment would take place. As soon as assessment order is passed, after assessment order, I can request my books of accounts. And when can I request my books of accounts? Provision says within 1 month from the end of the quarter from the completion of the assessment. That means, for example, this assessment was completed on 15th November. So our quarter end is 31st December and 1 month, which implies up to 31st Jan, I can request the books of accounts. That means 1 month from the end of the quarter, I can request the books of accounts. And if they want to keep for longer, now they can also keep for more longer, but they would require prior approval of CIT and DIT. Answer. This is about books of accounts. How do we get books of accounts? Now, about money, bullion, jewelry, any other explained and unexplained assets, what happened? Now, this is very beautiful. If they have taken away some of your unexplained assets, what is unexplained assets? The assets that you have not told to department, not shared to department. So it says you will not get these assets unless assessment is completed. But whenever assessment would take place, see, assessment would take place as soon as assessment is done. After that, you will be getting the assets. After that, you will be getting the assets. Before that, you are not going to get any of the unexplained assets. But we have explained assets. How do we get explained assets? Listen to this point carefully. This was initiation of search. This was conclusion of the search. After conclusion, end of the month plus 1 month, you can request for explained assets. You have to request for explained assets. Very carefully, yeah? Very carefully. What did I say? Within 30 days from the end of the month in which asset is seized, we have to request for release of explained assets. Explained assets, that assets which we have already shown, we have bought from white money. When they are going to release? Within 120 days from conclusion. See, you have to request within 1 month from the end of the month of Caesar, and they will release within 120 days from the conclusion of the search. Got this point? Got this point? Very careful. Sir, what if they are not able to release these assets up to 120 days? After 120 days, if they are not able to release the assets now, from 121st day till the date of completion of assessment, they will have to give you interest at the rate of 0.5% per month and part of the month. They will award you interest on this explained income. Wow, sir, wow, we never understood this way. So if you didn't understand this way beautifully, why are you not liking the video? You want me to cry? You want me to cry? Sir, we got it, we got it, we got it, we got it. Sir, there is small provision. I understand there is small provision. See, there was an assessee who knew I have to pay 5 crore rupees later on. So he requested the department to sell off his unexplained assets and pay off the liability immediately. Department denied, saying that we cannot sell the unexplained assets till the time assessment is completed. Who is correct, assessee or department? Provision says department is only correct because till the time assessment order is not passed, in that case, department cannot sell your unexplained assets. They cannot sell your unexplained assets. Just to save you from interest, department cannot sell your unexplained assets till the time assessment order is passed. This was a judgment came in case of Hemant Kumar Siddhi. Done, sir, done, sir, done, sir, done, sir, done, sir. We have a small concept of requisition, that is 132A. Now, what is this requisition? Now, understand this point very carefully. What is this point? See, for example, search took place in any other act. For example, search took place in case of PMLA. Search took place in case of, say, for FCRA. Search took place in case of Security Act, any of the act. For example, GST Act. And they found out that I have evaded income tax. GST department got to know that Rahul has evaded income tax. In that case, now they would tell income tax department that Rahul has evaded income tax. In that case, what would happen? In that case, that information would come to income tax department, and that is nothing but requisition only. Now, what will happen? Income tax department would request GST department to give away all the documents. As soon as documents are being received, in that case, requisition is called concluded. It is called to be concluded. This was all about your IT authorities. This is all what you have in your syllabus, and if it was really easy for you, it's not because it was easy, but you heard it properly. Okay. Done, sir, done, sir, done, sir. If you want to hear it, now hear it multiple times, n number of times. The number of times you want to hear it. This will help you a lot. Really help you a lot. Sir, 139.1, what this section is about. Understand this point carefully. 139.1. Yeah, no, we have started new topic, huh? Return of income. Who is required to file return? See, listen. If you are any company, if you are a partnership firm, if you are any LLP, you have to mandatory file return. Mandatorily, you have to file the return. No questions, no strings, no choice. You have to file, even if loss, even if zero income, even if zero business, you have to file return. If you are not a company, if you are not a firm, if you are not a LLP, in that case, you have to check if your gross total income before claiming Section 54 exemption exceeds basic exemption limit. For example, my GTI is 10 lakh rupees, but my deductions are, say, 6 lakh rupees, and my total NTI is 4 lakh rupees. It is up to basic exemption limit. Provision says no, you have to check GTI first of all. And in GTI also, for example, if your Capital gain was 10 lakh rupees. And your section 54 exemption was 10 lakh rupees. Your GTI turns out to be zero. Provision says no, this is also not valid. GTI before section 54 exemption, whatever exemption you have claimed under 54, now before that you have to consider. Third point, if you are any resident individual, if you are any resident individual or okay, who is not a company, who is not a AOP, who is sorry, who is not a LLP, who is not a firm, who doesn't have basic exemption limit, but if you have any foreign assets like for you have any building, you have any immovable property, you have any bank account, or if you have any financial interest in foreign, in that case you have to file the return. You have to file the return if you are the beneficial owner of these assets or you are the beneficiary of these assets. You have to file the return. Now, who is the beneficial owner? For example, if I buy the assets, then I am the beneficial owner. But if I buy it for somebody else, I would still be beneficial owner, but the person for whom I am buying shall be beneficiary. My father bought property for me, so father is beneficial owner, I am the beneficiary. Provision says if I have any bank account in a foreign, if I have any immovable property in foreign, if I have any financial interest like shares, like say for example share in firm, I have to file return mandatorily. Provision says if any of the asset is with if any of the person has any beneficial interest, or what did I say, listen, if any beneficial owner considers such income in his ROI, then beneficiary is not required to consider such thing. For example, if I bought a house, so I am the beneficial owner, I have to file the return. My wife would be beneficiary enough, so beneficiary is not required to file return if I have considered such thing in my ROI. Sir, got this point. It was a bit technical, but don't worry. This was simple. Any company firm LLP has to file. Other people, if GTI is above basic exemption limit, they have to file. If GTI is not above, you have to check whether you have foreign assets like immovable property, like bank account, like any shares. If you have to file the return. Next thing, if you do not have even foreign assets, then you have to check, did you deposit more than 1 crore in current account? If you deposit more than 1 crore in current account, now, then we have to file ROI. Or else, if you deposit 50 lakh or more, listen, greater than 1 crore in current account, greater than equal to 50 lakh in savings account. Remember, huh? Greater than equal to 50 lakh. If you went to foreign and you did foreign travel expenditure of 2 lakh or more on behalf of yourself or on behalf of somebody else, you did more than 2 lakh expenditure. You are saying at above, you are saying you do not have any basic exemption limit income. Now you are saying that you are doing 2 lakh of expenditure in foreign. You have to file return and tell. If your electricity bill is more than 1 lakh rupees, you have to file return and tell. If you are doing business and your gross receipts are more than if your sales are more than 60 lakhs rupees, you have to file the return. Provision says if you are doing any profession and your gross receipts exceeds 10 lakh rupees, you have to file the return. And in case your TDS deducted, TCS collected is more than 25,000, you have to file the return. In case of senior citizen, if it is more than 50,000 rupees, you have to file the return. When do you have to file the return? Important point. When do you have to file the return? First of all, do you get audited under transfer pricing, that is 92E? First question, do you get audited under 94E? If yes, then 30th November of the assessment year. In case you are a partnership firm who gets audited under transfer pricing, then for firm it will be 30th November and for partners as well it will be 30th November. If any company person whose books of accounts are audited under any of the act, if you are a company would be mandatorily audited. Any of the SSC like LLP audited under LLP Act, or any of the SSC who is audited under Income Tax Act, any act if you are audited now, then in that case your date would be 31st October of the assessment year. Remember, if you are a firm, then for partners as well this date would apply. And others, it would be 31st July. For example, like you, like me, 31st July, we have to file the ROI. Done, sir, done, sir, done, sir. Now we have 139.3, that is loss return. See, remember, if you have three kind of losses, business loss can include normal business loss, it can be speculative business loss, it can be specified business loss, or you have capital gain, capital losses, or if you have horse racing losses, if you have these losses and you want to carry forward these losses now, then you have to file ROI under section 139.1 imply you have to file ROI on the within the time specified above. You have to file the ROI within the time specified in this period. Sir, can we carry forward house property loss even if I late return? Yes. Can we carry forward unabsorbed depreciation with late return? Yes, you can carry forward. In addition to that, sir, restriction is only on carry forward. Set off is still allowed. For example, you have business loss and you are already late. Can you set it off against other incomes? If you have other income, can you set this business loss off? Yes, you can set this off. Set off is allowed. Set off is allowed. Even if late return is done, set off is allowed. But carry forward is not allowed. Carry forward is not allowed. That is what this point says. Sir, listen. These provisions restrain you from carrying forward the current year loss. If you have any brought forward loss and in that respective year you have filed return on time, then you can still carry forward it today's as well. Today's return is considered for today's loss. This year's return is considered for this year's loss. For any brought forward losses, you can carry forward any number of times. Despite of all, if you are genuine on because of this genuine hardship, you are not able to file return on time. You are delayed. You delayed return because of genuine reasons. Provision says you can seek condonation. You can seek condonation, 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 condonation. From where did you? From where will you go to seek condonation? Provision says if your loss amount is up to 1 crore, then you would go to CIT, PCIT. If your loss amount exceeds 1 crore up to 3 crore, then CCIT. And if your loss amount is more than 3 crore, then you would go to PCCIT. PCCIT, you would go to PCCIT. Now, in this point, till when you will go to condonation? See, within 5 years from the end of the assessment year, you have to go within 5 years from the end of the assessment year. And they have to either admit or reject your application within 6 months from the application month. Done, sir, done, sir, done, sir. This was about loss return. Come on to belated return. Belated happy, but similarly, belated return. You could not file return on time because of which you have to now file a late return. Till when you can file late return? Provision says up to 30th December of the assessment year, you can file the late return. Or before the completion of the assessment by the AO, whichever is earlier. See, if AO does early assessment and he passes the audit before 31st December, na, that shall be considered as last date for belated return, or 31st December, whichever is earlier. So there are certain consequences if you file the belated return. What are those consequences? First of all, if you have any house property, if you have any capital gain losses, okay. If you have any business loss, if you have any horses loss, you cannot carry forward. Carry forward is not allowed. If you file late return now, you will be charged 234A interest. What is 234A interest? If you whatever the late return you file, now, you are being charged interest under 234A. Late fees also 5,000 rupees, 1,000 rupees. Late fees also charged. No Chapter 6A Part C deduction, 80IA to RRP deductions will not be allowed, 10AA will not be allowed. And the most important thing which people forget is you will be given lesser interest on IT refund. If you remember, if you have a refund amount, now you get interest from 1st April till the date of disbursement of refund. But if your return is late, you will get interest from the date of ROI till the disbursement. So you will have a lesser interest period. Interest amount would be lesser. Done, sir, got it. 139.5. What is this? It is about revised return. Now, what is this revised return? See, you found that return was wrong. You did something wrong, then you can revise the return. Now, how many times you can revise? There is no limit as to how many numbers you can revise. You can revise any number of times. Till when can you revise? Sir, you can revise within up to 31st December of the assessment year or before the completion of the assessment. Sir, if we filed original return time, can we revise? Yes. If we filed original return as late one, can we revise? Yes. 139 one return or 134 return, either of two can be revised. Either of two can be revised. Important point. Revised return substitutes the original return in all the senses. What does that mean? In original return, I was not allowed to carry forward the losses. So in revised return as well, I will not be allowed. If in original return, I declared zero income, in revised return, I can declare losses if original return was filed on time. So if I can claim any deduction, any loss, any expenditure in original return, then only I can claim that in my revised return. Otherwise, I will not be able to claim that in my revised return. Sir, revised return can be filed even after receiving the intimation or after receiving the refund. That is also allowed to us. Remember, Ji, remember. If you want to file the revised return, now for that matter, you have to go to income tax portal, submit revised return as if you are filing the return as a normal return as well. You cannot simply hand over a statement of income to AO and request him to file the revision. No, he will not do any revision. You have to go to income tax portal and you have to amend it properly. Done, sir. Whatever the fresh claims you want to claim, this is an important point, really, really beautiful point. Just mark a triple star point to this. See, if you forgot any deduction, exemption, or any of the, say, expenditure, you forgot any of the two, any of the three. Can you claim these under revised return? Yes, under 139.5 you can claim. Can you claim under 139.8A? Normally not allowed. Any chapter 6 deduction not allowed. Any exemption normally not allowed. Now, if you have any deduction expenditure, normally if it is only for department benefit, you get, otherwise no. Can you get at the time of 142 1? No. 147? No. At the time of assessment, any fresh claims? No. At the time of appeals? Yes. So if you have any fresh claims, that can be only entertained at the time of revised return or at the time of appeals. Got it, sir? Got it, sir? Got it. If you are a charitable trust. Mandir, masjid, gurudwara. The charitable trust wala topic you understand? See, if charitable trust gross receipt is above basic exemption limit, whatever the chanda donation that this trust is receiving, if it is more than basic exemption limit, and that too before exemption wala basic exemption limit, before considering corpus exemption, before considering 15% limit, before everything, if it is more than basic exemption limit, now they have to file return of income. Remember, if they do not file, they will be charged penalty as well. In addition to late fees, they will be charged penalty of 500 rupees per day. If you are a political party whose gross receipts are above basic exemption limit before exemptions na under 13A, then they have to file the return. See, if you are any trade union of 44A, if you remember, if you are any medical institute 1023C, hospital, mutual fund, securitization fund, any news agencies, venture capitalists whose gross receipt exceeds basic exemption limit, in that case, they would have to file the return mandatorily. If you are in research institute, if you remember section 35 was about if you do scientific research, if you donate to somebody in scientific research. PGBP chapter revision video already uploaded. Do check it out. If you have not covered that PGBP, you can cover from that video now. If you have any research institute, now, you have to mandatorily file the return irrespective of the income. 134E is for the business trust. If you are any business trust REIT, in which you have to mandatorily file the ROI. If you are any investment fund, you have to mandatorily file the ROI. Done, sir, done, sir, done, sir. Defective return. Oh my god. Defective return. If your tax audit has not been submitted, report has not been submitted, you have not paid the taxes, or if you have not filed the return in prescribed form, or you claim excess TDS than what is appearing in 26 years, your return will be treated as defected. Oh wow, sir, wow. But you will be given an opportunity to rectify the defect within 15 days. If you do not rectify it now, then your return would be considered as void ab initio. Void ab initio, invalid, as if you have not even filed the return. It will be assumed that you have not even filed the return. Oh my god. Then we come on to next topic, that is permanent account numbers. This is the topic that CA inter student studies, not the final ones, but still I will cover everything taken. And if you like na this coverage, you have not liked the video, not subscribed to the channel, Matarani will see. Permanent account number. What does this point says? Understand. Who is required to get the PAN? If you are any of the SSC whose income exceeds basic exemption limit, you earn more than 4 lakh rupees, then you should get a PAN to 31st May of the assessment year. If you are any company, if you are any of the firm, if you are any of the trust, if you are any of the HUF, if you are any political party who is going to enter into a transaction, financial transaction exceeding 2.5 lakh in a previous year, so they should get the PAN up to 31st May of the assessment year. And if these people are required to get a PAN now, then companies, MD, firms, partner, trustee, HUFs karta, and political parties CEO, they also require PAN up to 31st May of the assessment year. So if these people require PAN, then in addition to that, their officers are also required to get PAN. If you do any business exceeding 5 lakh in a previous year, get the PAN in previous year itself. If you are a trust under 134A, you have to get the PAN in the previous year itself. If you deposit cash exceeding 20 lakh rupees or you withdraw cash exceeding 20 lakh rupees from a bank or cooperative bank, you have to get the PAN 7 days prior to getting that transaction done. Or if you open any current account na, with bank or cooperative bank, get the PAN before 7 days at least. Whenever you will get the PAN, you have to quote that PAN in return of income. You have to quote that PAN in challan. tax payment, or many other specified documents. What are these specified documents? We have 17 specified documents. You don't need to learn them, just listen. See, in these four transactions, now you would be required PAN irrespective of any amount. What are those transactions? If you open Demat account, you have to get the PAN. If you apply for credit card, then you have to get the PAN. If you open any current account, you have to get the PAN. Or if you buy any two-wheeler exceeding 2 lakh, if you buy any two-wheeler, if you buy any motor vehicle other than two-wheeler, you have to get the PAN. Now, in these four transactions, the PAN is required if you do cash payment exceeding 50,000. Cash payment more than 50,000. For example, you are paying to a hotel 50,000 more in cash. If you are making payment for a foreign travel purchase, foreign currency, you are buying dollar, in that case, you have to make payment exceeding 10,000 in cash. So exceeding 50,000, then PAN is required. If you are buying any draft orders or pay orders, in that case, if you pay more than 50,000 cash, PAN required. If you do any deposit in bank, if you go to bank and deposit money more than 50,000 in one day, then PAN is required. Now, in these five transactions, PAN is required irrespective of whether cash payment is done or bank payment is done. But if payment is more than 50,000, PAN is required. For example, you buy mutual funds, you buy bonds from companies or RBI, you buy any prepayment instruments, you buy any life insurance premium, or you do any FD more than 50,000 rupees at once, or FD more than 5 lakh rupees in a financial year, then PAN is required. A four transaction where we don't have anything common. For example, if you buy sell shares which are not listed, okay, which are not listed. If you buy any preference share then exceeding 1 lakh per transaction, you are required PAN. If you buy sell immovable property whose SDV exceeds 10 lakh rupees, you are required PAN. Or if you buy sell goods exceeding 2 lakh rupees per transaction, then PAN is required. If minor wants to enter into above transaction, for example, if minor wants a Porsche or if he wants a car, then how can he buy? Provision says he can buy by writing a essay. Not being political, not being political. If minor wants to enter these transaction, na, he can enter into above transaction by quoting PAN of the guardian. Done, sir. Now, listen to this point very carefully. Whenever you are required to code PAN, you can code Aadhaar as well. But provided that if you have not been allotted PAN, then you can code Aadhaar. Or if you have been allotted PAN and Aadhaar has been linked with PAN, then you can code Aadhaar. If you deposit more than 20 lakh rupees or withdraw more than 20 lakh rupees or you open current account, then you have to authenticate Aadhaar and PAN as well. Authenticate means you have to go and you have to give that thumb to the banker and he will authenticate it for you. If you fail to apply for PAN, you fail to code the PAN, if you fail to authenticate, then 10,000 rupees for per failure would be charged to you. Done, sir, done, sir, done, 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 sir, done, sir, done, sir, done, 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 sir. Now coming on to 139 AA, which is Aadhaar number. What is this all about? Provision says every person every person is required to code Aadhaar. Whenever you file a return of income or you apply for PAN, you have to code Aadhaar. Your Aadhaar is your identity. I don't know where it will be used. It is not a citizenship, but it is only the source of identity. You must have Aadhaar. Remember, the point is there. If you have been allotted Aadhaar up to 31st October 2024, okay, then you have to code Aadhaar. But if you have not been allotted Aadhaar, then before 1st October now, before 1st October, you were allowed to code Aadhaar enrollment ID. Aadhaar enrollment ID you were allowed to code, but later on after that, now you cannot code Aadhaar enrollment ID. And in addition to that, up to 31st December or 2025, wherever you have quoted Aadhaar enrollment ID, now you have to replace that Aadhaar enrollment ID with the Aadhaar with actual Aadhaar number. If your Aadhaar and PAN are not linked, you can get them linked by paying 1,000 rupees fees as of now. You do not get your Aadhaar PAN linked now. You should be ashamed of yourself first of all. And if not ashamed, you will have to bear the consequences. You will not be able to file return. Your file return will not process. You will not be given any refund. Assessing officer will not do any proceedings, and your TDS will be deducted. TCS will be collected with a higher rate. In addition to that, you have to face the many banking compliances, many banking non-compliances you have to bear. Provision of this Aadhaar PAN will not apply to somebody who resides in Jammu, Kashmir, Assam, and Meghalaya, who is not a citizen of India, who is 80 years of age or more, or who is non-citizen, non-resident as per India. 139B is tax return preparer. Who is this tax return preparer? See, there are certain people now who don't require much things in their ITR, so they can get their return filed via TRPs. Now, who can appoint a TRP? Provision says a company cannot appoint, and any person who is under audit cannot appoint any TRP for ROI purposes. They require chartered accountant, they require lawyers, nobody else. Huh? Okay. Now, who can become TRP? Provision says anybody can become TRP, provided he is not a chartered accountant. A chartered accountant cannot become TRP. A legal practitioner cannot become TRP. For example, Rahul has bank account at SBI. Okay. So SBI's authorized officer cannot become TRP for me. An officer of scheduled bank with which assessee maintains the account. So if I have account with SBI, so SBI's officer cannot become a TRP for me. An employee of specified lies, that means if I am employment of my own owner, so I cannot become the TRP for that my employer. Okay. Verification of return, very important point, sir. I don't know why this topic is important, but really important. Now, whenever you file the return of income, you have to e-verify it. E-verify it either via OTP, either e-verify through digital signature. You have to e-verify that return. Initially, you used to sign it and send it to CPC. That was the done. But right now, you have to e-verify it. How do you e-verify it? Provision says individual will e-verify himself. If he is not present in India, then any person who is competent on his behalf, then in that case, that will e-verify. HUF will e-verify by Karta. If Karta is mentally incapacitated, he is not fit. Then any adult member. Partnership firm will be e-verified by managing partner, or if there is no managing partner, adult partner would e-verify. LLP would be e-verified by designated partner, but if there is no designated partner, then any partner would work. Right? If company managing director, no managing director, then any director. If company under liquidation, then liquidator. Company under insolvency, then insolvency professional. Wow. Political party, CEO, local authority, principal officer, any other person who is competent. Remember, if return is not verified within 30 days of filing, it shall be considered as invalid return. Invalid return as if it is not filed. It shall be considered as not a filed return. Not a filed return. Not. You got now. Not a filed return. You got that point. Sir, you are revising. Why are you not understanding that you are revising the topic? You are not having a class that you are enjoying or you are making this much jokes. 148 is self-assessment. What this point is about. Provision says, see, whenever you pay any taxes in assessment year, it is self-assessment tax only. Any tax paid in previous year is advanced tax. Any tax paid in assessment year is self-assessment tax. Whenever you short pay the self-assessment tax, you were due, for example, 10 lakh, you paid 5 lakh. So first of all, this self-assessment tax would go to fees, whatever the fees is outstanding. Then it would go to interest, and after that, whatever the amount is remaining now, that will be adjusted from tax, so that again interest would be charged against you. 139.8A, that is updated return. Now, what this point is about? Updated return. If you cannot file return in the assessment year, you are given a golden opportunity. Listen, this is previous year 25-26. This is assessment year 26-27. If you cannot file up to 31st December, oh wow, such a good insan, such a good human, you are not able to file return up to 31st December. Vision says you are given updated return 31st March 2028, 29, 30, 31. That means 48 months from the end of the assessment year, you can file an updated return. Year 1, year 2, year 3, year 4. For 4 years, you can file updated return. Wow, sir. If you have already filed return under 139.1, can you file updated return? Yes, you can file updated return even if you have already filed return. Sir, if I file late return, can we file UR? Yes. If you have already revised return multiple times, can we file UR? Yes, you can file updated return any number of times. Sorry, not any time you can file. For any reason you can file. Important point. Sir, if you file updated return in first year, that means just within 12 months from the assessment year, then you are required to pay 25% of additional taxes. If you file your UR after 12 months but before 24 months, that is within second year, then you are required to pay 50% of taxes. If you file updated return after 24 months but before 36 months, that is in year 3, then 60% taxes are required. Oh my god. If you file updated return after 36 months, up before 48 months, that means within 4 years, then you have to pay 70% of additional taxes. And how these additional taxes are calculated, I'll tell you. Whatever the taxes are calculated, whatever the surcharge is calculated, whatever the education cess is taken, health and education cess, take that. Whatever the interest is calculated, take that. Everything summed up, everything summed up on this additional tax would be taken. Additional tax. Sir, fees is different. Fees is different. On fees, we do not pay additional taxes. Sir, important thing, when can we not file updated return? Whenever benefit of us benefit is involved now. Our benefit is involved now. You cannot file updated. If it is for the benefit of department, then only you can file UR. For your own benefit, you cannot file UR. If it is for the benefit of department, you can file. Sir, if updated return is a return of loss, how can you claim loss? Department says no, we will not allow. We will not allow. Literally, we will not allow. If updated return results in refund, that means earlier you were not getting refund, but now you are getting refund. No UR is allowed. If your tax liability is reduced, no updated return is allowed. If your refund is even increased, no updated return is allowed. Oh dear God. No benefit of you can be curtailed from this updated return. Sir, if you have already filed updated return now, then again you cannot file. For the second time, you cannot file. Sir, if search has been initiated against you, for example, as on now, on 1st March to 1st May 2025, search is initiated against me. And I wanted to declare every of my income in updated return of last year. Can I do that? Provision says no. If search has been initiated or requisition has been made against me, then I cannot file updated return. If survey has been conducted, can I file UR? No, I cannot. But if TDS Caesar survey has been done, can I file UR? Yes, I can file UR. Sir, if any search has been conducted at other party, for example, search took place at the premise of Lakshmi. Search took place at the premise of the Lakshmi, and my documents are found at the premise of Lakshmi. When I file UR, can I file UR? Provision says no, no, no. If my documents are found at somebody else's place, I cannot file UR. Oh my God, sir. If any assessment proceedings are pending, for example, against me, scrutiny notice has been issued for a relevant year. Can I file UR and declare my income in updated run? Provision says no. For example, if AO finds out that I have some income which has been under money laundering, which has been tainted under black money law, which has been under Benami Act, which has been under Smugglers and Foreign Exchange Manipulators Act, and that has been communicated, then I cannot file updated. That means I have these money that have been tainted under different acts, so I cannot file UR. Provision says some information department got to know about me from other countries' government. For example, government of London told the government of India that Rahul has property at London. In that case, I cannot file UR. Oh my God! Provision says if any prosecution proceedings have been initiated, me, I am about to go jail. I cannot file UR. Sir, very important point. This amendment. Listen to this point very carefully. See, for previous year 25-26, assessment year 26-27, I can file UR in year 1, year 2, year 3, year 4. These are the 4 years. If you already know now, if any assessment proceedings are initiated against me, I cannot file UR. But what if I have been issued a show cause notice under 148A? I have been issued a show cause notice under 148A. Can I file updated on the show cause notice issue does not amount to actual assessment proceeding. Assessment proceedings initiate when I receive an order under 148A that assessment has been initiated. Till the time the show cause notice is issued to me, it is not assumed that assessment has initiated. So can I file updated return if I have received this show cause notice? Right answer is yes, but only up to third year. What did I say? Carefully listen to this point. From assessment year till third year end. That is up to 36 months. If any show cause notice is issued under 148A, can I file UR? Yes, I can file UR. Yes, 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 absolutely. Yes, 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 I can file UR. But after 12 months, after for 36 months, up to 48 months, if I receive a show cause notice now under 148A, I cannot file UR. I cannot file UR. I cannot file UR. Why? Because we were given 3 years time now. Now I have been issued notice and I want to protect myself. Therefore, I'm filing updated return. No, no, we will not allow. We will not allow. You had 3 years sufficiently. You did not file. You were intending to be safe from department. Therefore, I cannot file updated return in fourth year if no show cause notice has been issued. But what if in show cause notice, after show cause notice proceedings are dropped against me, no assessment take place? Can I file UR after that? Yes, I can file UR after that. If after show cause notice proceedings drop against me, then I can file UR. Okay. For example, if I file any updated return, for example, for previous year 22-23, I had income of 5 lakh rupees. Sorry, I had a loss of 5 lakh rupees. Okay. I filed UR and made it an income of 10 lakh rupees. Provision says if I file updated return for a specific year and I converted loss to profit, loss to income, can I file? Yes, of course you can file. If it is benefit of department, you can do. But provision says if such loss has been set off against any other head of income, against any year, in any of the subsequent year, if this loss has been set off now, provision says have to file an updated return for that years as well. For those years as well, you have to file the updated return. If what did I say? What did I say? Listen to this point carefully. If I have converted my loss into profit for a year, then for whatever year such loss has been used now, then for those years as well, I have to file the updated return. Done, sir. Done, sir. How do we calculate taxes? See, if we have not filed return till now, and for the first time we are filing a return and that too updated return, then whatever the taxes as per ROI, take that. Interest, late fees, additional taxes, less whatever TDS has been deducted, relief, MAT credit, AMT. This is very simple. This is very simple. But what if we have already filed done? Let me tell you this with an example. Understand this point. Let me tell you. For example, earlier we had filed ROI declaring income of 30 lakh rupees. We paid taxes. Okay. We paid 234A interest, 234B interest, C interest, and F late fees. And after that, we paid everything. Now we want to increase this income to say 55 lakh. How will calculation take place? Understand. Whatever the taxes are arrived on, 55 lakh will be considered. 234A interest. New interest minus already paid old interest. You have to already reduce, you have to get a deduction because you have already paid some interest. This will be paid, this will be required to be paid. If you have 234B interest, again it will be calculated new, and whatever that has been paid will be reduced. This will be 234B interest. 234C, same thing. Again, new interest will be calculated based on new income minus old, again 234C. If you have already paid fees, again you will not be required to pay fees. So on this fees will no tax would be required. And whatever taxes you have already paid now, reduce that taxes from here. This will give you new payable tax liability, including interest. On this, you have to pay 25%, 50%, 60%, and 70%. This is how you calculate. If you want to take a screenshot of it, just take a screenshot of it, write it in your book because this is going to help you a lot. Really, 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 it is going to help you a lot. Okay, sir. Okay, sir. Okay, sir. Okay, sir. Done, 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 done. Shall we continue with assessment? Okay, so come on to assessment procedure. Now, whenever we study assessment procedure, there are certain steps, certain powers that assessing officers have. Broadly, we can categorize these powers into three sections. First of all, whenever there is going to be an assessment against you, assessing officer is going to issue a questionnaire to you. A notice for inquiry before assessment, and this power is within section 142(1). So assessing officer is going to issue you a notice for inquiry which is before assessment. In case you have not filed the return under 139(1), then assessing officer is going to request you to file the ROI. Sir, which assessing officer? Any assessing officer, ITO, assistant commissioner, joint commissioner, anybody can ask you to file ROI. Sir, if you have already furnished the ROI, then what will happen? Provision says they will issue notice to produce you books of accounts. You can produce books of accounts for the relevant previous year. For the previous year for which assessment is being done, now you have to present books of accounts for that previous year. In addition to that, assessing officer can ask for previous books of accounts as well. Provision says maximum 3 previous years he can ask. For any relevant previous year, he is doing assessment now. Preceding to that previous year, 3 previous year, he can ask for books of accounts. Done, sir. Done, sir. Done, sir. In addition to that, he can request for details with respect to assets and liabilities. For example, you have building in your balance sheet. He can ask the proper details of the building. If you have any asset which is beyond balance sheet, then also assessing officer can ask. But remember, that can be only asked with prior approval of joint commissioner. So what did I say? I said just a simple thing. Before doing assessment, the assessing officer will issue an inquiry before assessment, that is 142(1) questionnaire. Where if you have not filed the return, you have to furnish return. If you have already filed return, he will ask you to produce books of accounts for a specific previous year. He can also ask you to present books of accounts for 3 preceding previous years as well. And if you have, if he can also ask for details of assets and liabilities. If he wants to know beyond assets and liabilities, then in that case, he would require joint commissioner's approval. See, assessing officer na is good at nothing. He is good at nothing. Now, for example, he does not understand books of accounts. There are many complicated journals, complicated ledger accounts, complicated accounting being done, different procedure of business, different line of business, which is not easy to understand, not easy to account for. So it might happen that AO may feel that this complicated accounts, volume of accounts is too much. He is not able to understand the accounting treatment. There is multiplicity of the transaction, there is rerouting of transactions, so AO is not able to understand anything. In that case, if AO thinks that it is necessary for the interest of revenue, he can direct the SSC to get a special audit done. AO requesting SSC to get the special audit done. Now, special audit will be done by a chartered accountant, and in case he may also direct the SSC to get the inventory valuation done. Whatever the inventory we have, he can also get the inventory valuation done. Remember, AO cannot directly issue the chartered accountant. AO cannot directly appoint the chartered accountant. AO will go to CIT PCIT, and CIT PCIT is going to appoint the chartered accountant. Remember, CIT PCIT is going to appoint, but remuneration will be paid by central government. And how much is the remuneration amount? Minimum 3,750 rupees per hour, maximum 7,500 rupees per hour. Got it, sir. Got it. So AO will go to CIT PCIT. CIT PCIT will nominate C, and central government will pay the fees. Sir, whenever special audit is being done, before that, an opportunity of being heard is given to SSC. Always an opportunity of being heard is given. Sir, if SSC has already undergone audit under 44EB, again audit will be done. If you have already undergone audit, for example, under Companies Act, again special audit will be done. This is a different audit altogether. Remember, chartered accountant has to submit report within 180 days. Chartered accountant has to submit, and whatever the outputs of the audit are, whenever these outputs are used against the SSC, it will be a reasonable opportunity of being heard will be given to SSC before using such point. Sir, if for example a chartered accountant came to my premises and I beat him with the lathis and gusas, I punched him and fled him away. Chartered accountant was not able to do the audit. In that case, provision says if I fail to get special audit done, then in that case there will be best judgment assessment against me. Department will proceed for best judgment assessment against me. Remember, also 10,000 rupees penalty would be leviable. So there is an important case law. What happened was, chartered accountant was appointed and I am the SSC. Chartered accountant never came to me. He was properly appointed, but chartered accountant never came to me and he never did audit himself. I am being an SSC willing to get audited, but chartered accountant was not auditing. So in that case, is it my fault? Just tell me, is it my fault? Is it my fault that I want to get audited, but chartered accountant is not auditing? Is it my fault? Provision says no. Department cannot do best judgment assessment against you if you are willing to get audited, but chartered accountant is not doing. You can expel chartered accountant, but remember they cannot do anything against you. Done, sir. Third special thing, the third special power that AO has, it is reference to valuation officer. See, during the proceedings, if AO finds out I have a bungalow at Alibag, at what at most he can do, sir, he can request the valuation of that house. Of course, if a house is found, he must know the value now. So he will give a reference to valuation officer to determine the FMV of the property investment, whatever it is. Valuation officer shall give a report within 6 months, and whenever he is using that value, using the work of the valuation officer, now he will give a reasonable opportunity of being heard to the SSC as well. So these are three powers. During the assessment, if anywhere AO is stuck, now he has three powers. First of all is inquiry before assessment, a questionnaire is sent. Second thing, special audit. Third thing, valuation officer. These three sections are important. 142.1, 142 2A and 142A. These three sections are really important. Now, come on to summary assessment. Now we have the actual assessment going on. Remember, we have five kinds of assessment. Five kinds of assessment. First of all is 143 1, which is nothing but a summary assessment, a processing of return, a intimation. It is just a computer based assessment. No human is involved, nobody does the assessment. It is just the computer who verifies the return and checks out whether there are any wrongful done in the return or not. So whenever you file the return, there is a system, there is a computer who processes the return. If you have done any arithmetical error in the return, the system will correct. For example, your turnover under 44 AD is say 1 crore rupees, and you declare your profit as 20%, but you have written profit as just 6 lakh rupees. See, this is a clerical error now. You are saying 20%, but you are declaring profit as 6 lakh rupees, that is 6%. So it is wrong. In that case, assessing officer, sorry, in this case, processing will correct this arithmetical error. If you have any incorrect claim apparent from record, then to this will be corrected. For example, your interest income is say 5,000 rupees. But while claiming deduction under 80 TTA, you are claiming 10,000 rupees. So whenever you are claiming something extra, department will correct it. This incorrect claim apparent from record, these incorrect claim would be corrected. So disallowance for current year loss. See, if you are filing late return, then current year loss would be disallowed. If you are filing late return, then Chapter 6A Part C deductions would not be given to you. 80IA to RRB will not be given to you. 10AA will not be given. And if there are certain expenditures that are disallowed in tax audit report, such expenditure shall be incorporated while processing the return. What did I say? Computer will do these things. Clerical errors done. Oh, sorry. Arithmetical errors, incorrect claim apparent from record, any loss disallowance, any expenditure disallowance, or any deduction disallowance, and any expenditure disallowance from the tax audit report. These five adjustments will be done at the time of processing of return. Remember, whenever processing is done, whenever such adjustments are going to be done, there is a notice given to us to tell why these assessments should not be done. Why these assessments should not be done, we have to respond such notice within 30 days. And if we don't respond to such notice, now department will process the return considering such adjustments. Got it, sir. Got it, sir. Intimation will be given to us. Intimation will be sent to us in case of refund, in case of demand, in case of adjustment of losses. See, when we will receive intimation, when there is demand, a refund, or any set off any losses. But in practical life, now we get intimation always. We always get the intimation. We always get the intimation. And what intimation you have not got is you have not liked the video. You want me to cry. You want me to overreact again. You want me to overreact. No, sir. No, sir. No, sir. Sir, even comment down your experience. Comment down will also be good. I mean, I will appreciate your comment. I will always appreciate your comment. I read all the comments. Sir, when intimation is sent, that is important. See, whenever you file ROI now, you receive intimation within 9 months from the end of the financial year of ROI. For example, you filed ROI on 31st July 2026. So year will end on 31st March 2027, and you will receive intimation within 9 months, that is 31st December 2027. This is the period within which you will receive the intimation. Got it, sir. Got it, sir. Got it. Not is for a scrutiny assessment. First assessment is done. That is based on computer. This is second assessment. Ji. Now, what a second assessment is about? It is about a scrutiny assessment, or we call it a regular assessment. What happens in case of regular assessment? See, this is being done against those who file the return. If I file the return, it will be done against me. If I don't file the return, no scrutiny is going to be take place. It is just a regular return, just checking out whether you have done correctly or not. Whatever returns you have filed or not, if they are correct or not. This is merely being checked in scrutiny returns. Now, important thing is whenever AO wants to do scrutiny against you, he should issue a notice under 143.2. Before notice, he cannot do assessment, and this notice is really mandatory. Without this, assessment cannot be done. Sir, when this notice can be issued, this is important, and when can order be passed, that is important. Remember, notice date is 3 months from end of financial year of ROI. The year in which you file the ROI, now let that year end, and within 3 months of that year end, you will get the notice. An order will be passed within 12 months from end of relevant assessment. Yes, sir, these are two dates you must learn. You must learn. You don't have a choice. If somebody is listening to this, do drop I mean, timestamp on this point so that everybody is able to learn this point. Notice for scrutiny is sent within 3 months from the end of the financial year of ROI. An order is served within 12 months from the end of the relevant assessment year. For example, for previous year 25-26, assessment year 26-27, ROI is furnished on 31st July 2026. Notice can be issued up to 30th June 2027 and order can be passed up to 31st March 2028. These are the due dates. Notice is mandatory. Without notice, no assessment can be done. No assessment can be done. Assessment is absolutely invalid. Remember, Remember, for example, during the course of the proceedings, assessing officer is doing any assessment of a trust. Assessment of a trust. Assessing officer finds out that this trust has done some specified violation. Specified violation means I have used money for private religious purpose, any other activities like unlawful activities I have done. If I have done specified violation now, assessing officer will not cancel the registration. He will refer the case to CIT-PCIT and CIT-PCIT will cancel my registration. If he cancels the registration, AO will do the processing based on cancelled registration. If he doesn't cancels, now AO will do processing as per regular registration only. Done, sir, done, sir, done, sir. This was scrutiny assessment. Can it be more simpler? Can it be more simpler? Sir, it cannot be more simpler than this. 144 is about best judgment assessment, sir. Best judgment assessment, or politely we call it ex parte assessment. An assessment which is done for non-filers. See, 143.1 was done based on computer. Scrutiny was done for the return filers, and this is done for non-filers or who do not cooperate. Now, against whom it is done? See, if you did not file return under 139.1 or 4, then best judgment assessment is going to take place against you. If you were issued notice for inquiry before assessment and you did not respond, then best judgment assessment is going to take place. If you were supposed to get audited under 142, that is special audit was directed against you, you did not do. You did not do. Provision says in this case again, special audit will take place against you. And provision says if you did not respond to scrutiny notice, again special audit will take place. In these four cases, now special audit is best judgment assessment is going to take place. Remember, whenever AO wants to do best judgment assessment against you, now in any of the four cases, he is going to issue a show cause notice as to why best judgment assessment should not be done. Always a show cause notice is issued as to why best judgment assessment is not done. No, why should not be done. You should respond to that. You should respond to that. Okay? After that, assessing officer will do the best judgment assessment. After that only. But remember, in all the four cases, show cause notice is issued. Right answer is no. In special audit case, you will receive a show cause notice. If you did not file ROI, you will receive show cause notice. If you did not respond to scrutiny, you will receive show cause notice. But if you did not respond to inquiry before assessment, you will not receive show cause notice. Directly assessment will take place against you. Directly against assessment. So what did I say? There are four reasons for best judgment assessment. In three cases, you will receive show cause notice. But in one case, that is inquiry before assessment, you will not receive any show cause notice. Sir, whenever best judgment assessment take place against you now, remember you will never be granted refund. In case even if you are due some refund, the refund will not be given to you. In addition to that, sir, assessment shall be done within 12 months from the end of the relevant assessment year. 12 months, this is important date, 12 months from the end of the relevant assessment year. For example, assessment at 26-27, so assessment should be done up to 31st March 2028. Sir, here we don't have any notice date or due date for notice. Right answer is no. Provision says for whatever reason best judgment assessment is going to take place now. If for those things notice time limit has been complied now, in that case assessment is valid. For example, if notice for scrutiny was issued on time, so assessment for best judgment is also valid. Remember, whenever assessing officer is going to determine some income, it cannot be based on ad hoc basis. That means it cannot be based on, oh, it cannot be based like this. Acha, he bought a car last year. His padosi said he must have 5 crore income, so I will add 5 crore. No, this is not add, this is ad hoc basis. This is not allowed. There has to be a reasonable basis as to why income is added. Done, sir, done, sir, done, sir, done, sir. There is a section called 145.3. Now, what is this 145.3? See, remember, see, best judgment assessment is done now for those people who do not cooperate. Who do not cooperate, this is for them. Okay. Now, what if you present your books of accounts, but you are changing your method of accounting every year? One year you are following cash system, the other year you are following the mercantile system. For one year you are following cash, the other year you are following mercantile. You are not consistent with the method. You are not consistent. So your books are not reliable now. In that case, AO will do the discretionary best judgment assessment. If you do not follow ICDS, AO will do discretionary based judgment assessment. If AO is not satisfied about your books of accounts, AO will do discretionary based judgment assessment. Got it, sir? Got it, sir? Got it. Got it. Okay, so that is why, and that is when best judgment assessment take place against you. See, we studied three assessments till now. First of all was assessment based on computer, that is 143.1. Second was scrutiny 143.3. Third was best judgment assessment 144. Then let us skip on to the next assessment, that is 147, income escaping assessment. Few things to be understood. Income escaping assessment assumes that you are a thief. You are a robber. You must have some undisclosed income. Now, therefore, income escaping assessment is being done against you. Second thing, whenever income escaping assessment is being done now, remember, it can be done twice as well. For example, assessment was already done under scrutiny. Again, some found income. Then income escaping assessment can be done again. Therefore, it is called reassessment. Okay. So if assessment is already done under any of the section, income escaping assessment done can be done again. Third thing, for doing income escaping assessment, now assessing officer has to follow certain steps. Three steps he has to follow. First of all, he will issue a show cause notice under 148A. Then he will issue a notice under section 148. And at last, he will pass order under 147. Three things. Remember three things. Huh? Show cause notice under 148A, notice under 148, and order under 147. Show cause notice under 148A, notice under 148, and order under 147. How things proceed start right away starting from 147. Whenever assessing officer wants to do assessment under this section, he will do the inquiry. He will find out who has escaped this, who has escaped the income, who has escaped the taxes. He will do the inquiry from different people. And he will find out that Acha, Rahul has some income escaped taxes. So he will issue a show cause notice. Show cause notice as to why income escaping assessment should not be done. I have to respond. Got it? I have to respond within the specified time limit. Sir, if I do not, if I respond beautifully, then proceedings will drop. But if my response is either non-satisfactory or I did not respond, the assessing officer will pass the order that this case has been selected for income escaping assessment. Simple thing. First of all, show cause notice is issued. I have to respond that. Based on that, assessing officer will decide that whether assessment is to be done against me or not. Second thing, once order has been passed that assessment is going to take place against me, he will issue a notice under 148. He will issue notice under 148 and require me to file the return of income. I have to file a return of income provided that assessing officer has actual information that I have escaped the taxes. Remember, assessing officer should have the knowledge that I have escaped the taxes, then only he can issue the notice. Done, sir, we got this point. When assessing officer is deemed to have knowledge, there are 6 instances. First of all, if my information has been flagged by the tribunal or court has said that Rahul has income escaped taxes, so he'll do his assessment, therefore department is doing this is one source of information. Second thing, either because of risk management strategy of CBDT. CBDT has its risk management strategy, and that risk management strategy has told the department to do my assessment. Third thing, any audit objection raised. Now, what is audit objection? See, government is also under audit now. Government departments are also under audit. So, in department of the government audit, in the government audit, it is being flagged that Rahul's income has been escaped taxes. In that case, AO will be assumed to have information. Fourth thing, if any of the information is found under section 90, for example, Government of London told Government of India that Rahul has escaped taxes. This is the fourth source of information. Fifth, if any of my information has been collected via faceless collection of information, any department, any bank has told my information to income tax departments, this is also one of the reason for income escaping assessment. And last, any information found on account of survey. Whenever survey took at my premises, survey take place at my premises now. In that case, it is very simple. Department is aware that I have escaped taxes. So what did I say? First of all, show cause notice will be issued, and show cause notice will be proceeded with the order of 148A. After 148A order, a notice under section 148 is issued only if AO has information. AO has information. It is evidence from these six instances. Sir, it can be based on risk management strategy. It can be based on audit objection. It can be based on court and tribunal. It can be based on, say, DTAA. It can be based on survey. It can be based on 135A, that is faceless collection of information. AO can have any information from these six sources. Now, if 148A show cause notice is issued to me, AO has information. In that case, AO will issue a notice. AO will issue a notice under 148A and require me to file a return of income. AO will require me to file a return of income. And this return will be returned under section 148. This return will be returned under section 148. This return will be filed under 148. If I have already filed return under 139, again we have to file this section. I can declare some extra income, I might not declare income, but whatever I do, I have to file return within 3 months from the end of the month in which notice is issued. Once I file the return now, AO will ask more information, I have to submit more information. AO will ask information, I have to submit information, and this process will take place continuously. And after that, order will be passed under section 147. Remember, one step is very important here. One step is important. During the entire process, AO requires only one approval. During the entire process of show cause notice, notice and order, AO requires only one approval, and that approval is at the time of passing the order under section 148A. Whenever AO decides now, whenever AO decides that this case has been selected for income escaping assessment and he passes order under 148A, he shall pass order only with prior approval of joint commissioner, joint director, additional commissioner, and additional director. Important, dear friends, important. AO will only pass order under 148A if he has prior approval of joint commissioner, joint director, additional commissioner, additional director. Remember, if AO finds out, if a notice has been issued to me, if 148 notice has been issued to me, proceeding is going against me. In between, AO finds out some extra income that has not been told in my first notice. Some extra income AO got to know. Does he require to issue another 148 notice? Provision says no. Once notice has been issued, now AO can incorporate other informations as well in this notice only. He is not required to issue another show cause notice or another notice. Got it, sir? Got it, sir? This is a simple process. Listen. What did I say? 3 steps will be followed. First of all, show cause notice will be given to me and I have to respond. Based on that, AO will pass an order. Order will be only passed with prior approval of joint commissioner, joint director, additional commissioner, additional director, and this order will set the tone that case has been selected for income escaping assessment. Once it is decided, AO will ask me to file a return under 148, but only he can ask when he has information via 6 sources. Then only he can ask me to file the return. Otherwise, he cannot ask me to file the return. If he has 6 sources, then only he can ask me. He will issue the notice. I will respond. Issue the notice, I will respond, and he will pass under 147. He will pass order under 147. This is entire income escaping assessment. Remember, whenever the case is with respect to faceless collection of information, 135A case, that means my information has been collected via faceless collection of information. Department has not gone anywhere, but faceless collection of information told the department that Rahul has income escaped taxes. In this case, show cause notice under 148A is not issued. Directly 148 notice is issued, but with prior approval of joint commissioner. That is the only exception in this case. Got it, sir? Got it? Simple thing. Show cause notice, then order. But in case of 135A, no show cause notice. Directly notice will be issued to us. Then, so this is the entire summary. In case you want to refer, this is the entire summary of the income escaping assessment. Remember, who will do the assessment? When income escaping assessment is being done now, not every assessing officer can do the assessment. Ideally, joint commissioner can do assessment in all the cases, but AOs like assistant commissioner, like deputy commissioner, like ITO, they cannot do the assessment normally. They can do assessment only in four cases. First of all is if case pertains to 135A, if case pertains to risk management strategy of CBDT, if case pertains to 90/90A, that is DTAA information, or case pertains to audit objection. In these four cases, these people can do the assessment, but only with prior approval of joint commissioner. Otherwise, these small people cannot do the assessment. These small people cannot do the assessment. Remember, joint commissioner is the only one who does the assessment, but these four cases can be dealt by lower authorities as well, but only with prior approval of joint commissioner. Remember, survey or court. If best judgment, sorry, if income escaping assessment is on account of survey or because of court order, only joint commissioner will do the assessment. If you want to hear it again. Now, what is the time limit before which you should be issued notice? What is the time limit before which you should be issued notice? Remember, sir, if your income escaped is more than 50 lakh rupees or 50 lakh, then for issuing show cause notice, now for issuing show cause notice, that is 148A, time limit should be taken as 5 years from end of relevant assessment year. 5 years from end of relevant assessment year. And notice should be issued within, notice under 148 should be issued 5 years and 3 months. Okay, 5 years and 3 months. But if income escaped is lesser than 50 lakh rupees, then show cause notice is issued within 3 years from end of relevant assessment year, and notice is issued within 3 years, 3 months from end of relevant assessment year. I'll take one example and make you understand. For example, this is Rahul. For previous year 25/26, my income escaped is, say for example, if it is 70 lakh rupees and it is 30 lakh rupees, when notice can be issued? See, if income escaped is more than 50 lakh rupees now, then for show cause notice, we have 5 years from end of relevant assessment year. That means previous year 25/26, assessment year 26/27. Assessment year will end on 31st March 2027 plus 5 years. That means they can issue notice up to 31st March 2032. And notice will be issued after within 3 months, that is 30th June 2032. But if income escaped is less than 50 lakh rupees, then show cause notice will be issued within 3 years from end of relevant assessment year. That means previous year 25/26, assessment year 26/27. At 3 years, that is 31st March 2030, before which show cause notice should be issued. Before which show cause notice should be issued. That's it. And notice date, when notice can be issued after 3 months, that means up to 30th June 2030. I hope things are clear. I hope things are clear. You have to first of all check if income escaped exceeds 50 lakh or not, 50 lakh or more or not. If it is more than 50 lakh, then 5 years, 5.3 years will apply. But if it is less than 3 years, if it is less than 50 lakh, then 3 years, 3.3 years would apply. Got it, sir? Got it, sir? Got it, sir? Got it. See, there is a small catch. For example, I bought an asset in previous year 21/22 for 20 lakh rupees. This is on account of undisclosed income. I have bought a piece of land. Again, for previous year 22/23, I bought another piece of land for 30 lakh rupees. Again, in previous year 23/24, I bought a piece of land of 20 lakh rupees. Again, these all three lands are adjacent to each other. Now, for this year also, I have 3 years time limit from end of a relevant assessment year. For this year also, I have 3 years from end of relevant assessment year. Show cause notice date, of course. 3 years from end of relevant assessment year. Why? Because for every year, income is less than 50 lakh rupees. For every year, income escaped is less than 50 lakh rupees. So every year we'll have 3 years for show cause notice. Correct? Provision says if income escaped is in a form of asset, income escaped is in a form of asset, and cumulative value of asset across the years exceed 50 lakh rupees na, then for every year, instead of 3 year, 5 year limit would apply. Instead of 3 years, 5 years limit would apply. What did I say? See, ideally, if your income escaped is less than 50 lakh rupees na, then 3 years, 3.3 years would apply. But if income escaped is in a form of asset and cumulative value of an asset exceeds 50 lakh rupees, then for every year where 3 year was applicable, 5 year would apply. I hope you got the point. I hope you really got the point. If you got the point, why are you not liking the video? You like the video. Sir, whenever income escaping assessment is done on account of court order or any account of appeal or refer or revision, in that case, now there is no limit as to what period income escaping assessment can be done. It can be done even before 5 years or 10 years as well. Sir, for example, income escaping assessment is being done on account of 23-24. This is the previous year for which income escaping assessment is being done. Provision says tax rate will apply for this year only, not current year, but that respective year's tax rate would apply. Done, sir. Income escaping assessment, listen. Till when order shall be passed? Till when order shall be passed? Very carefully listen to this point. For example, previous year 25-26. My income escaped is 40 lakh rupees. Till when show cause notice can be issued? Show cause notice can be issued within 3 years from end of relevant assessment year. That is, assessment year is 25-26. Sorry, 26-27 plus 3 years, that is 31st March 2030. This is the due date of issuing notice, show cause notice. Notice can be issued up to 3 months more, that is 30th June 2030. Okay. This is the last date of issuing notice. Yes. Provision says as notice is issued, order shall be passed. Order shall be passed within 12 months from end of financial year of notice. That means if notice is issued in 2030, let that financial year end 31st March 2031 and add 1 year to it, that is 31st March 2032 is the due date of passing the order under this section. So order is dependent upon the notice date, not show cause notice, but notice date. If notice is issued, let that year end within 1 year from the end of the financial year, order is to be passed under 147. If during this proceedings, see, if during this proceedings notice has been issued, order is yet to be passed. Notice has been issued and order is yet to be passed. Even if during this proceedings now, for example, AO is required to go to valuation officer. He wants to know the valuation. Provision says whatever the time that has been wasted now, that will be given extra. What I am saying is, if during the proceedings, if AO has to go to valuation officer, then whatever the time that is being wasted on account of going to valuation officer, this will be given extra. If notice has been issued and order is yet to be passed, during that proceedings, AO had to go to special audit. He has to order special audit. Then whatever the time that has been wasted in special audit, that will be given extra. Listen this point very carefully. See, for example, AO is doing income escaping assessment of a trust, and AO finds out some violation. In that case, he will refer the case to CIT, PCIT. Provision says whatever the time that is being wasted, that will be given extra. For example, AO was doing the assessment and assessee went to Board of Advanced Ruling. He went to Advanced Ruling. Provision says whatever the time that has been wasted now will be given extra. Sir, if AO was doing the assessment and order was about to be passed, okay, AO wanted to know information from the other government. So he requested Government of India to take information from other country. So whatever the time that has been wasted in asking information now, that is also given extra. AO was doing the assessment and during that assessment now, court intervened. High Court intervened, Supreme Court intervened and put a stay to that proceedings. Provision says whatever the time that has been wasted, whatever time that has been wasted will be given extra. Whatever time that has been wasted, that will be given extra. Remember, during the proceedings, if any of the case TPO is being referred, transfer pricing officer is being referred now, you will get flat 12 months extra. Flat 12 months extra you will be given. Done, sir, done, sir, done, sir. And these same provisions apply to 143 and 144 as well. If income escaping assessment is being done, scrutiny assessment is being done, any best assessment is being done, and order is yet to be passed. In between, if any of these things happen, now whatever time is wasted will be given extra. Whatever time is wasted will be given extra. Despite of all, listen, despite of all. If AO has less than 60 days now, he will get minimum of 60 days. He will get minimum 60 days. If he has less than 60 days now, he will get minimum of 60 days. Are we clear with income escaping assessment? This is all about income escaping assessment. This is entire income escaping assessment. Got it? Are Baba, got it? If got it, then you have not subscribed to the channel. Sir, how many times you will beg for subscribe? Till the time you will not subscribe, I'll request. This is about income escaping assessment. Moving on to the next assessment and the most important assessment, that is block assessment. After block assessment, we'll do the remaining things. Okay. Now we are done with 4 assessments. First of all was, sir, computer-based assessment, that is intimation 143.1. Second assessment was scrutiny 143.2 or 143.3. Third was 144. Fourth was income escaping assessment 147, and now we have block assessment, that is chapter 14b assessment based on chapter 14. This assessment take place in case of search cases. If, for example, search happened at my premises, then my assessment would be done in block assessment basis. It will be done. For example, search is not done at my premises, but search has been done at the premise of some other person, and my documents are found there. Again, block assessment would be done in my case. Third thing, if a requisition is done, what is requisition? Search has been done in any other act, and information has been passed to income tax department. Then block assessment would take place. Answer. Now, what happens in case of block assessment? We'll understand first of all the basics. For example, search is initiated. Search is initiated on 1st May 2025, and search is concluded. Concluded means Panchnama is drawn. That means 10th May 2025. Panchnama is drawn. Panchnama is drawn. Taken. Search initiated and search concluded. From 1st April 2025 till the date search is concluded, this period is called block period. In addition to that, six preceding previous year, that is previous year 24, 25, 23, 24, 22, 23, 21, 22, 20, 21, and 19, 20. These 6 years, along with the year of search, right away starting from 1st April till the date of conclusion of the search, is called block period. Are we clear what is block period? Are we clear what is block period? Everybody, are we clear what is block period? See, that period starting from 1st April till the date of conclusion of search, in addition to that 6 preceding previous year of search. This is called block period. Done, sir. What assessing officer intend to do is find out the undisclosed income for these 6 years as well as this current year of search. He tries to find out the undisclosed income. Now, what is undisclosed income? It is specifically mentioned. Undisclosed income is nothing but any money, bullion, jewelry, or any valuable article that have not been disclosed to income tax department. It may be a virtual digital asset as well. It may be based on book entry. It may be based on anything, but that has not been disclosed to department. That is nothing but undisclosed income. So what did I say? Assessing officer wants to tax your undisclosed income of the block period. In the block period, he wants to tax the undisclosed income. Now, what the things say? Just understand. Huh? I want you all to remember this thing carefully. For example, your entire income, disclosed, undisclosed, is say 50 crore. Your entire income is just 50 crore rupees. Disclosed or undisclosed, it is 50 crore rupees. Out of this, 30 crore is that income that you have disclosed, either in ROI, either in assessments, or at any point of time you have disclosed this income. Either at any point of time you have disclosed this income. So what is your undisclosed income? What is your undisclosed income, sir? This remaining 20 crore rupees is your undisclosed income. The income that I've already disclosed in ROI, that I've already disclosed in assessment, that is disclosed income that I have never disclosed now. That I have never disclosed, department wants to tax this thing. Department wants to tax this thing. I will refer this point again later on. This is undisclosed income that has never been disclosed. On the date of search, whatever the asset are being found that have never been disclosed to department wants to tax that. Now, listen to this point carefully. See, what happens for these 6 consecutive years, for these 6 years plus along with this year, there is a new assessment going place now. Block assessment will take place for 6 years plus year of search. Block assessment is going to take place. In that case, what will happen? If there is any pending assessment, there are greater chances that any assessment under scrutiny is already pending, or any income escaping assessment under 147 is already pending. It is possible now that some assessment might be already pending, and then in between search took place. Says if search take place, then whatever the pending assessments were there now, they shall abate. They shall abate. If there are pending assessments going on and block assessment is initiated, then these pending assessments shall abate. Sir, but what if this block assessment is set aside by CIT appeals? Later on, we went to CIT and this block assessment order is being set aside. Provision says if it is set aside now, this pending assessment, the abated assessment shall again revive. That means if block assessment is existing, others shall stop, other assessment will stop. If block assessment is set aside, then this pending assessment shall revive. But what if this block assessment is again revived because of ITAT order? Then this pending assessment shall abate. That means at any point of time, if block assessment is being done, no other assessment would be done. If block assessment is set aside, the other assessments would continue. Got it, sir? Got it. Done, sir. Done, sir. Done, sir. Provision says whenever this abatement would take place now, any of the pending assessment will abate. If any case has been referred to transfer pricing officer, that officer will abate. Officer will not do anything. But if there are any pending appeals or any revision under 263, 264, these will not abate. Any pending assess appeals will not abate. Got it, sir? Got it, sir? Got it, sir? We clearly got this point. Remember, for example, search took place on first May 2025. Assessment was going on, and next year, 1st June 2026, next year, another subsequent search took place at my premises. Another search took place. Now I have to get this order also as passed. This order is to be also passed. AO has to pass this order as well, and this order is also to be passed. AO has to pass two orders. Provision says whenever a subsequent search is conducted now, AO will continue with the first order only. He shall continue the first assessment, he shall pass the order of the first assessment, and after completion of first assessment, he shall move on to second assessment. Remember, if there is less than 3 months to pass the second assessment, for example, it might happen that time is not sufficient. So if there are less than 3 months left for the second assessment, AU will get minimum of 3 months. Minimum 3 months he will be given. But these were the basics. First of all, we understood block period. Block period is nothing but the year of search from 1st April till the conclusion of the search plus 6 preceding previous years. In this entire period, whatever is the undisclosed income, we have to tax that. In addition to that, if any subsequent search is being done, then first of all, original assessment would be completed and then subsequent assessment would be initiated. And one more point, if any pending assessment is abated, then block assessment is started now, pending assessment shall abate. If block assessment is set aside, then the abated assessment shall revive. And again, if block assessment is revived, then pending assessment shall abate. Sir, we got that. We got to that point. Now listen to this point very carefully. Very carefully. Listen to this point now. Now, what happens during the search? Initiation of search on 1st May 2025. Conclusion of search 10th May 2025. With the conclusion, they take away all of your assets. They take away your books of accounts. They take away your cash. They take away your jewelry. They take away your other valuable articles. Whatever you have, they take away. And they would analyze everything. And they would request you to file a return. They would issue a notice to you and they would request you to file a return. Whenever they request you to file a return, they will give you a time of 60 days. 60 days time limit is given. 60 days time limit is given. Listen very carefully. 60 days time limit is given. They will take away everything. They will give you opportunity. They will give you opportunity to file a return. And this return is called return under section 158 BC. 158 BC is to be filed within 60 days from the notice. Here you have an opportunity to either file the existing return or disclose the sum of the undisclosed income. For example, as I had already discussed, this 30 crore was already disclosed, but this 20 crore was never disclosed. Okay? You have an opportunity to disclose some of this money or either of the total money you can disclose in this return. Sir, you can either disclose entire of undisclosed 20, you can disclose 10, you can disclose whatever you want. You have an opportunity to disclose your undisclosed income in this return. Now, what happens? Whenever you are being sent this notice, you have to file this return within 60 days. Sir, what if we file in 60 days or what if we don't file in 60 days? Sir, if you file on time, if it is filed on time, remember, it shall be considered as return under 139 only. It shall be considered as return under 139 only. That means the way you file 139 return, it shall be considered as that only. But if you delay, there are multiple consequences. Sir, they might accept it or not. It shall not be considered as 139 wala return. They might accept it or not. In addition to that, from 61st day till the conclusion of assessment, they are going to charge interest at the rate of 1.5% per month and part of the month. On whatever the obligation is, whatever the liability will accrue later on, they will charge interest at the rate of 1.5% per month. Sir, even if I file return in between, they will not consider that. They will charge interest till the completion of the assessment. They will charge interest. So if you file return on time, No interest is levied, but if you delay the return, interest is levied on you. Sir, whenever you file return, no intimation is issued to you. You cannot revise that return. In addition to that, 147 or 148 is not issued. Any notice under 148 is not issued. Sir, but a scrutiny notice is issued and proceedings will take place as accordingly. Now, what they have? They have your books of accounts, they have your cash balance, they have your jewelry, they have your other valuable articles. In addition to that, they have your disclosures in return as well. They have your return as well. Now, what AO will do? AO will do nothing, but AO will ask for more documents. He will require, whenever he require, he will ask other people as well. And based on that, he will determine your total income and tax payable. During this proceedings, no reference to DRP can be done. Dispute resolution panel cannot be done. We'll study that later on. Remember, any order, any notice, if any of the notice is required to be issued under this provision, this shall be only issued with prior approval of Joint Commissioner. Any notice is to be issued now to me, it will be only issued with prior approval of Joint Commissioner. And who can do the assessment? Provision says minimum Assistant Commissioner, Deputy Commissioner, Assistant Director, Deputy Director, minimum these people will do the assessment. That means ITO cannot do the assessment here. Search assessment cannot be done by ITO. But these people can do. These people can do. Remember, these people can do. And any notice is to be issued only with prior approval of Joint Commissioner. Got this point? So they will require me to file the return. I will have to file the return on time. If I file on time, well and good. If I did not file, I will be charged interest. Answer. In this return, I had an opportunity to disclose some of my earlier undisclosed incomes. Now, now listen. Listen. AO will now compute my income and taxes on this income. Listen very carefully. For example, I had undisclosed income of 20 crore. I had originally undisclosed income of 20 crore rupees. Provision says whatever the undisclosed income you have now, on this entire income, 60% taxes would be applicable. On this entire income, 60% taxes would be applicable. But, but if you had disclosed some of the income under 158 BC wala return, then penalty would not be leviable. But if you did not disclose, then penalty would be leviable at the rate of 50% on such undisclosed income. See, what did I say? At the time of search, you had 20 crores of undisclosed income. You had an opportunity to disclose entire 20 crore in return. But if you disclosed only a few, on that you will be just required to pay the taxes. But if you did not disclose, you will be required to pay taxes as well, and you will be required to pay penalty on that as well. Done, sir, done, sir, done, sir. This is what we have in this topic, that whenever assessing officer computes the income of the block period, how will he compute? See, undisclosed income is nothing but undisclosed income declared under 158 BC, or undisclosed income that is not declared but found by assessing officer. That means entire 20 crore that has been undisclosed, either disclosed in return or either not disclosed in return, whatever the income is shall be considered as undisclosed income. Income that has been disclosed by us under 158 BC. Earlier we had not disclosed this income, but in return we declared under 158 BC return, we declared this income. Some of the income that we did not even declare, on which penalty should be applicable, that is here. On both these incomes, 60% taxes would be charged, but on the above income, penalty would not be charged, but in the income which we have not disclosed in return, penalty would be charged. This is the important point. What did I say? Very carefully listen. I had some disclosed income, I had some undisclosed income at the time of search. Whatever undisclosed income I had at the time of search, I had an opportunity to disclose the entire income in return. If I disclose the sum of them, I can be levied just taxes on that. But if I did not disclose some of the income, I will be required to pay taxes as well, plus penalty will also be levied on that. This is the same thing that they are saying. What is the undisclosed income of the block period? Two incomes that you have disclosed in ITR, that you have not disclosed in ITR. These two will make up the total undisclosed income that have been disclosed in ITR, that have not been disclosed in ITR. These two will form the undisclosed income. But tax will be levied on the entire point. Tax will be levied on entire money. Penalty would be only levied on which you have not declared in return under 158 BC. See, there are some exclusions. I hope you got the point. There are certain exclusions. See, some incomes are not considered as undisclosed. See, as I have previously said, I'm just pointing it out again. What does it mean? See, if you have entire income of 50 crore, out of which 30 crore is already disclosed, and 20 crore has never been disclosed to department. So provision says undisclosed income will never comprise of the income that has already been disclosed in ITRs. If in previous year's ITR, previous year ROIs, I have already disclosed some income, that will never be undisclosed income. That can never be said undisclosed income. If any of the previous year, if for any of the previous year assessment has been done and income has been determined in the assessments, provision says that income shall not be considered as undisclosed income. Third thing, if year of search, if during the year of search, that is 1st April to 1st May, that is this year of search, whatever income that has been determined based on books of accounts, this will not be considered as undisclosed income. Why? Because this will be disclosed in the ITR of this year only. In next year's ITR, we will disclose this ROIs next year. In next year's ROI will disclose. Answer. What is also not considered as undisclosed income? Remember. Sir, for example, previous year 24-25 and search took place on 1st May. For previous year 24-25, ROI is not yet filed now. So whatever income we derive on previous year 24-25, it shall not be considered as undisclosed income. At last, if any of the income is found out under 115A, that is interest to non-resident, any of the income of NRI or any of the income of a senior citizen, this shall never be considered as undisclosed. So what did I say? Very carefully listen. Very carefully listen. At the time of search, just check that. Take the date of the search. On the date of the search, you have certain disclosed income that you have disclosed in ITRs, that you have disclosed in assessments. There is some disclosed income, and the other that you have never ever disclosed to anybody else. Income that you have never ever disclosed to anybody now, that is nothing leviable to 60% tax. Fine. Out of which, if some has been declared in 158 BC return, then only taxes are applicable. But even if you don't declare in return of 158 BC, in that case, you will be charged penalty on that as well. But five incomes can never be considered as undisclosed. First of all, income that has been declared in ROIs of previous years, income that has been assessed by the assessing officer in previous years. Income for the year of search will never be considered as undisclosed income because return of income has to be filed in subsequent year now. If last year's return is yet to be filed in current year, for example, previous year 24-25 returns is yet to be filed now. On the date of the search, date has not expired for this year. Therefore, this year's income shall also not be considered as undisclosed. At last, any income of non-resident under 115A, 115G, NRI, or any of the income of a senior citizen under 194P, that shall never be considered as undisclosed. Remember, in this entire block period, listen. In this entire block period, if assessing officer finds out any of the international transaction for these 6 years, he can refer the case to transfer pricing officer. He can refer the case to TPO. But if assessing officer finds out any of the international transaction in this year of search, he will not refer the case to PTPO. Why he will not refer? Because this transactions return will be filed in next year. What if assessee might declare? Therefore, for current year of search, AO will not refer the case to TPO, but for preceding 6 years, AO will refer the case to TPO because that transactions have been already done and year have been passed. Sir, what if I have a loss? For example, it was previous year 17-18 and I have a loss of 10 crore rupees of that year. Can I set off that loss against this block income? Right answer is no, I cannot set off such loss from my block income. I can carry forward if it is permitted, but I cannot set off against this block income. In addition to that, provision says if you are doing an assessment of a firm, then any interest, remuneration, commission, bonus, salary to a non-working partner shall be disallowed and then computation shall be done. Done with that point. So this is the entire block assessment majorly. If there are some things left, we will discuss. See, whenever assessing officer would do the assessment, now he would do assessment based on reasonable basis. He must have proof as to what he is adding to the income. Based on the material gathered, evidence gathered, he will only add income based on that. If an international transaction is found out for the year of search, he will not refer the case to TPO. But I mean, if an international transaction is being found out for any preceding previous year, provision says that he will refer the case to TPO because years have been completed. If any firm is being assessed, then salary to a non-working partner shall be added back. Interest, remuneration, anything that is being paid to non-working partner shall be disallowed for computation purposes. If any If any brought forward losses, if we have enough provision says that brought forward losses cannot be set off against this block period's income. Provision says whatever the tax rate is 60% tax plus applicable surcharge and education cess. So surcharge and education cess on the search income has not been notified. It is just mentioned applicable surcharge and education cess, but no surcharge education cess has been notified on the search income. Till when AO has to complete the assessment, remember. What does this say? For example, search was initiated on 1st May and concluded on 10th May. Provision says 12 months from end of quarter of conclusion of search. That means this quarter one ends on 30th June. This quarter one ends on 30th June. From this quarter end within 12 months, that means 30th June of the next year, AO has to complete the order. Here, AO has to pass the order. During this proceedings, if any of the time has been wasted, that will be given extra. If case has been referred to TPO, that time 1 month, 1 year extra would be given. Remember, whenever search assessment is taking place, na 234 A, B, C, these penalties, these interests would not be applicable. Advance tax would not be applicable. Any of the underreporting, misreporting would not be applicable. Sir, this is all about the search assessment. These things we have already discussed. This is all about the search assessment. We understood 5 assessments. First of all was 143.1, that was intimation, computer based assessment. Second assessment was scrutiny assessment, 143.3. Third was 144. Fourth was 147, income escaping assessment. And last was chapter 14b, that is block assessment. 5 assessments. Moving on to the remaining parts of the chapter. Whatever remaining parts are there, we will discuss one by one. First of all was powers of a joint commissioner. What powers do joint commissioner have? Actually, they don't have much powers. Provision says, see, joint commissioner, whenever he requires, he can issue directions to assessing officer. See, if a case is pending and he thinks that case is taking too much time, he can issue directions as to do things faster. Sir, that directions shall be binding on the assessing officer. And remember, whenever such directions are being issued, a reasonable opportunity of being heard should be given to SSC. 144C, this is important. See, whenever an order is about to be passed, in case of a non-resident foreign company, or case has been referred to TPO and based on his order is being passed. What did I say? Any order is passed based on non-resident or foreign company, or the case has been referred to TPO and based on TPO's report, order is passed. In either of the cases, what happens? Assessing officer will send a draft order to assessee. Draft order to assessee. This will be like Jamai Raja, he will be given, do you want to eat? Is that okay to you? Fine now. Aisa karke, they will send a draft order. Now what assessee can do, listen. Assessee can file his acceptance. Oh, this is very nice order. I am okay to this order. Assessee will say it is nice order too. Very nice order. In that case, what will happen? AO shall pass the order within 1 month from the end of the month of acceptance. As soon as assessee accepted it, AO will pass the order based on draft order only. Draft order will become the final order. Done, sir. AO cannot do anything. Sorry, assessee cannot do anything. For example, draft order has been sent to me. Okay, it is a case of NR and a non-resident foreign company. A draft order has been sent to me. I have an option of not doing anything. Like, not do anything. Just to sit back and relax and wait to order pass. Provision says if I did not do anything now, AO will convert that draft order into final order within 1 month from the last date of the acceptance. Provision says whatever the last date was acceptance was now, within that month, end of the month, within 1 month, AO will pass the final order. AO will convert that draft order into final order only. But sir, I have one option. I can object to this draft order as well. Assessee can object to draft order. If he is not satisfied with the order, he can object. Where can he object? He can object to dispute resolution panel. And dispute resolution panel. See, if assessee objects to DRP shall issue guidelines to AO as to how to do the assessment. This guideline shall be issued within 9 months, and AO has to follow these guidelines. It is binding on AO. Within 1 month, AO has to pass the order as soon as guidelines are received. Within 1 month from the end of the month of receiving guidelines. So if I'm not satisfied, I might go to DRP. DRP shall issue guidelines within 9 months from the end of the month. And AO shall pass order within 1 month from the end of the month of guidelines. Answer. If AO is not able to pass the order within 1 month, if AO is not able to pass the order within 1 month, remember, it will be an invalid assessment. Absolutely invalid assessment. Done, sir. Done, sir. Got it. Got it. Got it. Provision says, see, AO has to accept whatever the DRP says, but assessee can object to DRP guidelines at IT18. What did I say? If assessee is not satisfied with the DRP guidelines, then he can object it to IT18. He can file an appeal to IT18. Provision says no provisions of search. In case of search assessment, the DRP guidelines would not apply. What all topic we have, what other topics we have? Sir, we have another topic, that is rectification. You all are aware of this thing. See, if you filed any return, if you have filed any return, and there are some incorrect claims or something wrong which is apparent, something wrong which is apparent, you can see that it is wrong. You can see that it is wrong. You can absolutely see that it is wrong. What did I say? If you find, if you see, if assessing officer has passed any order or any IT authority has passed any order which has a mistake, and which mistake is not debatable. Assessing officer has passed or any of the IT authority has passed order on which there is a mistake. For example, 2 plus 2 is written 5. So this is not a debatable mistake. It is absolutely wrong. In this case, sir, either IT authority suo moto of its own, or on the basis of the assessee can rectify the mistake. They can either suo moto do that, or with the request of assessee, they can also do rectification. Remember, they can rectify any order, any intimation order of TDS. Rectification can be done suo moto, or it can be done by the application. There is no form and fees prescribed. You have done this rectification, I am aware. Sir, if IT authority does the rectification suo moto, they can do within 4 years from the end of the year of order. If order is passed in this year now, within end of this year, 4 years will be given. 4 years from the end of this year would be given to IT authority to pass the order. That's to pass the correct order. But what if assessee applies? Provision says if assessee applies, now assessee can apply within 4 years as well. And IT authority will have 6 months to rectify the order. 6 months they will have to rectify the order. But if they are not able to rectify in 6 months, so they will be given extra 4 years if it is for the benefit of the assessee. If IT authority cannot rectify in 6 months, now then they will be having extra time, up to 4 years extra they will have for rectification if it is for the benefit of the assessee. Sir, what if there was a mistake in order? IT authority passed, assessing officer passed an order, and there was mistake. I went for rectification, and AO passed an order again doing the same mistake. That means rectified order also had mistakes. Then what would I do? Provision says for those errors that have been found in rectified order, now I'll have fresh 4 years for rectification. For example, there was mistake. I went for rectification and order AO passed the order, and again there had some mistakes. Again, the rectified order had some mistakes. Provision says I will have fresh 4 years for those mistakes that are there in rectified order. Provision says every rectification order is an appealable order. You can appeal against any of the rectification order. Section 156, that is demand notice. What is this all about? Listen. See, whenever there is an outstanding notice against us, any intimation, any of the outstanding demand is there, department will issue us the demand notice. For example, assessment order is passed, 10 crore is payable, so they will issue a demand notice to us. If an intimation has been issued, intimation in itself is a demand notice. I have to pay that demand notice within 30 days. If I did not pay within 30 days now, from 31st day till the date I didn't actually pay, sir, interest would be charged 1% per month and part of the month on the outstanding demand. What did I say? As demand notice is received, I have to pay demand within 30 days. If I did not pay from 31st day till the payment, I will be charged interest at the rate of 1% per month and part of the month. Sir, what if there is too much of interest, that more than demand interest has been arrived? Provision says you can seek for condonation of this interest. If your interest is up to 50 lakh rupees, you can go to CIT, PCIT for condonation. If your interest is more than 50 lakh rupees up to 1.5 crore, then CCIT. If your interest is more than 1.5 crore, then you can go to PCCIT for condonation. So there is protective assessment, there is no section to it. If there is any income on which, sir, ownership is disputed, you are not aware who is the actual owner of this income. So in that case, whatever the probable owners are now, you will assess income in all of the assessee's hand, and later on, if somebody is identified against whom income should be assessed, for others rectification would be done. For example, if there is a mother and there are 4 daughters, and rental money is received, so assessing officer will assess income in all the 4 hands. And later on, if one is found to be owner, na, so for others, rectification would be done by the assessing officer. This is called protective assessment. Section 292B and 292BB, these are two important, beautiful sections. What are these sections? Listen. See, if there are any small defects, like, for example, my name is Rahul. Say, my name is Rahul. Why, sir? Say, my name is actually Rahul. Instead of Rahul, they mentioned RHAUL. In notice, assessing officer mentioned my name wrongly. Or in notice, my PAN number had only 9 digits. In notice, my address was a slightly wrong. Some clerical errors were there in the notice. Some clerical errors were there. Provision says whenever there are some clerical errors in a notice, this will never invalidate the assessment. This will never ever invalidate the assessment. Assessment shall stand valid. Clerical errors will never invalidate the assessment. But sir, there are two exceptions to it. For example, there was a company called Rahul Private Limited. And this Rahul Private Limited amalgamated with Pinky Private Limited. Pinky Private Limited on 1st April 2023. If you are aware, whenever two companies amalgamate, information of amalgamation is given to Competition Commission of India, to Income Tax, to RBI, to SEBI, multiple different people. This information is given, including income tax. So if amalgamation is taking place, that means department is really aware about the amalgamation. But what happened on 1st May 2025? Department issued a notice against Rahul Private Limited and not Rahul Pinky Private Limited, not the amalgamated company, but old non-existent company notice was issued. Are you understanding? Are you understanding the issue? Company was amalgamated 2 years back. Right now, there is no such existence of the old company. There we have new company only, but notice has been issued to an old non-existent company. Provision says in this case it is invalid notice. It is invalid notice. If notice has been issued to a non-existent amalgamating company, it is invalid. Second thing, what if notice is not even issued? 143.2 scrutiny notice is not even issued. Provision says it is invalid. Notice for scrutiny is to be mandatorily issued. Mandatorily issued. Done, sir. Section 292BB. What it says, listen very carefully. For example, notice has been issued against me. Notice was supposed to be issued on 30th June, but notice was issued on 7th July. Department delayed by 7 days. Department was late by 7 days. Will this make assessment invalid? Right answer is yes, it is invalid. Assessment shall stand invalid if notice is not issued on time. But sir, what if assessee cooperates? Assessee has responded. Assessee is cooperating and department is able to pass the order. Assessing officer is able to pass the order now. Then it shall become valid or valid notice. What I'm saying is, even if assessee has responded late, or sorry, even if his notice even if notice is issued late, but assessee has responded and department has been able to pass the order now, then it shall become a valid notice. During the course of proceedings, if assessee objects now, then it shall become invalid. But if assessing officer is able to pass the order, it shall become invalid. If assessing officer able to pass it, it is invalid. Done, sir. So what did I say? Clerical errors would not invalidate the proceedings, but non-issuance of notice is invalid. Notice to non-existing company is invalid. Said late notice is ideally invalid, but if assessee cooperates and order is passed, then it is invalid. It is invalid. It is valid. It is valid assessment. But if assessee objects, it shall become invalid. Got it, sir? Got it, sir. Got it, sir. Got it. A legal term is being used, that is non-issuance of notice, or non-issuance of notice is not the curable defect for department. There is a legal text being used in question answer. Do refer the question answers as well of this topic. Section 144, that is faceless assessment. Last but not that important topic, that is faceless assessment. Do not go anywhere. I will make you remember all the sections. Whatever sections are there, important sections, I will make you remember. Okay. What is their National Faceless Assessment Center? See, SSC and AO should not meet. AO and SSC should not meet because they have issue with bribing. SSC might bribe AO and AO might pass any order which is not beneficial for department. Therefore, in between them, there is a person called NFAC, National Faceless Assessment Center. What National Faceless Assessment Center would do, it had 4 units. That is assessment unit, who would actually do the assessment. There is a verification unit. If any verification is required, cross examination of any evidence or a witness testing, whatever they want to do, the verification unit would do. Any of the transfer pricing matter, legal matter, logical matters, any of the technical matters required, then technical unit would help. Or any of the work, checking related work would be done by review unit. So what happens? AO and SSC cannot directly communicate each other. They shall communicate via NFAC. What NFAC would do now? See, NFAC has the computer-based allocation system. CAS, it is called Computer Automated Allocation System. NFAC will directly select the case, directly select the SSC, random SSC would select based on CAS and directly issued notice to me. Notice which one, 143.2 or 142.1, any notice it would issue to me. Then NFAC would randomly find out the AO. Then AO can be from any of the place. My name would not be told to you and AO's name would not be told to me. See, whatever response I submit to NFAC, this notice would be given to AO. If AO requires anything, he would communicate to NFAC and NFAC would ask the same thing to me. If I do not respond, then NFAC would proceed with best judgment assessment. Based on the information that I provide, now assessing officer will compile the order. Means if this order is about if this is about TRP order, then NFAC will come. This AO will communicate the order to NFAC, and NFAC will give draft order to me. I might accept it, I might reject it, I might go to TRP. Whatever the case, later on penal proceedings will start. If it is not with respect to DRP now, then this assessing officer will pass the final order and this final order will be communicated to me. There is no way in between. Sorry, there is no direct communication between assessee and assessing officer. During this process, if AO feels like he wants some technical support, he will refer the NFAC and NFAC will direct the technical team. If he requires any of the, say, verification work, he will request NFAC. Whatever is required, he will request. During the course of proceedings, if AO and SSC are not able to communicate each other, NFAC will arrange video conferencing as well. If during the course of the proceedings, if a special audit is required, then NFAC will talk to PDGIT of my area, and then PGDIT will appoint a chartered accountant for special audit of mine. And at last, if SSC and NFAC cannot communicate virtually, then this NFAC would redirect the case to my local jurisdiction. This is the entire faceless assessment. This is what all you need to understand. This is all about your income. This was all about your entire assessment chapter. Now I want you all to remember the section numbers, for which I am just writing down every section number that we have come till far. Every section number, just focus on for next 10 minutes. 10 minutes, just 10 minutes. Sir, right away, when we started off with the chapter, we came on to section 116, which was about income tax authorities. Then 119 was there about powers of CBDT. Then 124 was jurisdiction of assessing officer. Then we had special powers. 131 was the general power, general powers. This was important. Then we had 133.6. This was our information from third party. Our information from third party. 133C. Our information from us. Then we had 133B. Department would visit us just to collect the information. Then we had 133A, which was about survey. Then we had 133A, 2A. This was tedious thesis survey. Then we had 132. This was search. Then we had 132A, which was requisition, and we have 132B, which was release of assets. These were all sections in IT authority. Moving further, we came on to return filing, where we had 139.1, which was about who is required to file return and when he is required to file the return. Then we had 139.3, which was about loss return. Okay. Then we had 139.4, which was about belated return. 139.5, it was revised return. 139.4A, 4A, it was return of a charitable trust. 4B was political party. 4C was trade unions. It was about mutual funds. It was about venture capitalists. It was about institutions under 1023C. 4D was research association and 4E was business trust. 4F was investment fund. These were all returns or return of income. Then we came on to 139.9. This was defective return, if you remember, and 139.8A was nothing but updated return. Then we came on to PAN and Aadhar. See, we had 139AA. This was Aadhar, and 140B. This was about self-assessment. These were the important. Otherwise, PAN and Aadhar you can skip out. Then later on we came on to actual assessment, whereby we started off with 142.1. This was inquiry before assessment. Then we came on to 142A. This was special audit. Then we came on to 142A. This was valuation officer reference. Then we came on to 143.1. This was intimation. 143.2 was notice for scrutiny. 143.3 was scrutiny. 144 was best judgment assessment. 144A was reference to joint commissioner. 144B was nothing but faceless assessment. 144C was DRP reference. 145.3 was discretionary best judgment assessment. I'll tell you what to learn. Don't worry, I'll tell you what to learn. When we don't have 146, 147 to 153 was about income escaping assessment. After 158, we had 154, 154, we had rectification. We don't have 155, but we have 156, that was demand order. Then we had 158 series, we had 158 BC, that is block assessment ROI. After that, we have only one section, that is 292B and 292BB, which is about incorrect information in notice or in case of late notice. These were two sections. Out of this, what all sections you need to learn, just listen to this point. I'm just marking cross ITA, you don't remember. 119, 124 not required. 131, 133.6, 133A, 2A, 2, this is required. Requisition, if you can remember. This you don't know, this you don't need to learn. These 5 to 6 sections you can remember. That is general powers, our information from third person, survey, TDS survey, search, and requisition. These 6 sections you are able to learn. In ROI 101 is important. See, all these sections you are aware, but these sections you can skip out. These sections you can skip out. 4A, 4B, 4C, 4D, you can skip out. Out of this, if you want to learn any, so 104C is important. Sometimes question is being asked. 139.9 defective return not required, but updated return is good. It is important. This you can skip out. This is not required. Okay, this is not required. In assessment now, this inquiry before assessment, special audit, valuation officer you can skip out if you don't want to remember the section number. Intimation, scrutiny notice, best judgment assessment is important. Joint commissioner you can skip out. Faceless assessment section you can skip out. This discretionary best judgment assessment section number you can skip out. Okay, I'm not talking about skipping the section, I'm talking about skipping the section number. You can skip out the number. Best judgment assessment, just remember show cause notice, you just remember notice and just remember the order. Rectification really important. Demand order important for your exam. 158 BC important. 292 BB it is also important. So these sections whatever are there, you can take a screenshot of it and you can just remember as per your convenience. Beyond that, you don't require any other section. I hope this video was informative for you. And if you have not liked the video, not hyped the video, not commented on the video, uh, not subscribed to the channel, I would cry. I would cry. Good, but thank you so much, guys, for coming to this video. It was really fun in teaching assessment in this entire English. What all videos you want, do comment down in the comment box. It will be a pleasure to make videos on this language. I'm really enjoying teaching in this language. So, if I could help more to you, it would be my pleasure. So, whatever you feel like, now just message me down in the comment section. I will be more than happy. Maybe till the time you message, the video is already there. So, it might happen. Just check the comment, the playlist as well, and do share it with your friends. Now I'm putting too much of efforts in making videos, so do share it with your friends as well. Bye bye, signing off. See you, Rahul, all the very best.